All right, Markets Desk is jumping straight into the movers board. And oof, this board is loud already. Index tape is red, SPY down 0.5%, QQQ down almost 0.8, IWM down 0.7, VIX pushing higher. So if a name is green in this tape, it better have volume behind it. Top of the board, SGLY up about 135% at $7, 24.8 million shares, 82 times relative volume. That's not a sleepy gap. HUIZ is next, up 102%. And look at that relative volume, 800 plus times. Then RITR, still a 13-cent stock, but 300 million shares traded. That's a different kind of animal. Loop up 57, BTCT up 56. And then we've got some red names too. ONFO, TNON, SURG. We're not chasing headlines here. We're checking volume, float, dilution risk, and whether the 1-minute chart is actually holding the bid. All right, let's pull up SGLY, because this is the chaos name on the tape right now. SGLY is printing around $7, up roughly $1.50% depending on the feed, while SPY and QQQ are red pre-market. So yeah, relative strength is not the issue. But look at this 1-minute chart. Oof, that wick. We had the early push from the mid-6s, then the real expansion candle, from about 668 up into 843, and that was not quiet volume. That was the million share type blast. Since then, different animal. It's been range, chop, lower highs, base trying to form. For the Markets Desk, the clean levels are simple. 650 is the floor I'm watching underneath. 770 is the first real reclaim level above. Between those, it's noise with a lot of speed. Now the catalyst, and this matters because small cap runners need a reason. SGLY put out a headline this morning, non-binding strategic framework agreement for a potential 900-acre South Carolina AI data center campus. They're talking about roughly 25 megawatts of existing or near-term grid capacity, subject to utility confirmation, and a possible pathway toward about 99 megawatts. So the tape here is AI data center, tiny float, small market cap, and boom, squeeze mechanics. But keywords, non-binding and potential. That's not me dunking on it, that's just the language. The chart can trade the headline, absolutely, but the headline is not the same thing as a completed project. And here's the part you cannot ignore on SGLY. Dilution risk is loud. ProTerminal has this marked high risk. Active shelf, active equity line, 27 total offerings counted, and about 74.5 million raised over the last 12 months. They also just closed a 1.8 million registered direct offering this week. So yeah, exciting chart, big volume, big headline, but small cap runners with fresh financing history can flip fast. Back to the chart. If it's under 7.70, I treat it like a range trade, not a clean breakout. If 650 cracks below, the base is failing.
Thanks, Markets Desk. Okay, macro lens on for a second, because this tape has a pretty clear mood this morning. SPY's at 764.90, down about 0.5%. QQQ's weaker, 710.23, down 0.82%. IWM's down 0.77% at 299.41. So it's not just one mega cap acting weird. Growth and small caps are both leaning lower. And VIX is up to 19.39. Not panic punching the glass, but definitely the market putting on a helmet before breakfast. The big tell here is QQQ flirting with that 710 area after the earlier breakdown. That's the mood ring for risk today. If tech can't stabilize while vol is firming, the whole board gets a little more careful. Now here's why the macro desk cares. Bonds are not helping the equity bulls this morning. TLT is down 1.04% at 82.16. IEF is down 0.42% at 92.99. That's the long end pressure showing up. And when duration gets hit, expensive growth usually feels it first. That lines up with QQQ lagging SPY. Then oil is the other loud thing on the tape. Up 3.85% to 135.95. That's not a tiny wiggle. That's inflation pressure knocking on the door with a clipboard. Gold, meanwhile, is down 1.08% at 409.38. So this doesn't look like a classic safe haven stampede. Dollars basically flat at 27.89. Yen softer, down 0.29%. So the story is less global panic and more rates and oil are tightening the room. Different problem, same annoying house guest. And the one pocket that is kind of doing its own thing right now is crypto. Look at this. Bitto's green, up about 4.8%. Coins up 5.4%. NSTR is up basically 9%. And that's while SPY, QQQ, and IWN are all red, and VIX is pushing higher. So yeah, crypto can absolutely decouple for a stretch. It trades on its own flows. Bitcoin beta, squeeze mechanics in the crypto equities, all of that. But don't confuse green crypto with an all clear on risk. That group is still wildly volatile, and crypto itself is highly volatile and unregulated. So when the broader tape is soft, I'm treating that as a separate momentum pocket, not a market-wide risk-on signal. Calendar-wise, keep the alerts on. 12:30 Eastern, we've got Philly Fed, estimate 25, and jobless claims, estimate 210K. Then 2 p.m., leading index, estimate up 0.1. Into that, the macro desk watch list is pretty simple. QQQ 710 is the line I care about on the downside. Lose that with volume, and the pressure's still real. If QQQ can reclaim 716, then at least intraday sellers lose some control. VIX is sitting 19.39, so that 20 area matters. And oil at 135.95, up almost 4%, is still the heat source. All right, macro map is set. Back to the tape. Let's go see which single names are actually ignoring all of this. All right, macro desk time. Let's zoom out from the small cap fireworks and read the whole tape. This is risk off, but it's not panic off. Big difference. SPY's at 764.79, down 0.56%. QQQ is the heavier one at 710.16, down 0.83%. IWN's off 0.8%, so small caps aren't getting a hall pass either. And the VIX is only 19.42, up about 2%, which tells you people are buying some insurance. But nobody's kicking the emergency exit open yet. Here at the macro desk, the line I care about first is QQQ 710. If that starts slipping cleanly, the Nasdaq isn't just soft. It's starting to price a bigger rates headache. And VIX 20 is the other door handle. Above there, the mood changes from mildly annoyed to actually defensive. And the reason equities look a little grumpy is sitting over in bonds. TLT is down 1.04% to 82.155. IEF is down 0.42% to 92.99. So even without quoting the 10-year tick by tick, the message is pretty clear. Yields are leaning higher. That's the annoying macro tax collector showing up at the tech party. When long bonds sell off, the Nasdaq usually hears it first because all those future cash flows get discounted at a meaner rate. Dollars basically firm, 27.89, up 0.04%, while the yen proxy is weaker at 57.85, down 0.29%. Even if you only trade U.S. stocks, keep one eye on that yen-dollar pressure, because weak yen plus rising yields can tighten global financial conditions in a sneaky way. TLT 82 is the bond line on my screen. Below that, rates pressure stays the main character. Now flip over to commodities and FX, because this is the whole macro story in one screen. Oil is the problem child today, 135.95, up 3.85%. That's a real inflation impulse, and it lines up with why bonds are getting hit and why growth is having a tougher morning. Gold, though, is not catching the safety bid, down 1.08% at 409.38, so this isn't classic fear. It's more like higher energy, firmer dollar, weaker yen, and equities adjusting to that. Dollar's only up a hair, 0.04%, but the yen is down 0.29%. And that matters because when yen weakness shows up with oil ripping, you usually get tighter financial condition vibes, not a clean risk on tape. And then here's the weird pocket of strength. Crypto-linked names are green against red equities. BITO up 4.76%. Coin up 5.43%. MSTR up 9.02%. Crypto can move completely wild, super volatile, and it's not regulated like stocks. But on the tape today, that group is showing a real relative strength, while QQQ is sitting near that 710 support area. Calendar radar from here. 12:30 Eastern, claims and Philly Fed revisions hit the screen. Then 2 o'clock Eastern, we get leading index. So macro desk takeaway: oil hot, bonds weak, QQQ heavy, crypto oddly strong. Coming up, let's hand it back to the charts and see which single names are actually holding up in this tape. All right. Breaking news first. Moderna and Merck just lit up the biotech tape. ProTerminal's newsroom is tracking a sharp Moderna surge after promising melanoma vaccine news from its collaboration with Merck. What we know: the market is treating this as a potentially major clinical and revenue catalyst for Moderna, and it's hitting short sellers hard. What we don't know yet: the full data package, durability, regulatory timing, and the final commercial economics. Biotech never lets you skip the fine print, because apparently one spreadsheet wasn't enough. Market read here at the macro desk, with QQQ around 710.7 and red on the morning. This looks like a true single-name catalyst, not a clean broad risk-on signal. Next headline: Fed officials are still leaning hawkish in the minutes. The desk is seeing some officials supporting additional rate hikes to keep pressure on inflation. And that matters because the equity tape is already sitting on a sensitive edge. VIX at 1935, QQQ still under pressure, and duration names don't exactly love the words more hikes. The bond proxies are showing that tension too. TLT around 82.16, IEF around 92.99. No Fed predictions from us, that's a mug's game. But the message is simple: policy uncertainty is still a volatility input. And the bond market plumbing story: the U.S. Treasury plans to at least double the cap on long-end bond buybacks to $4 billion. Why it matters: the long end drives mortgage math, discount rates, and a lot of the valuation pressure that hits growth stocks when yields get jumpy. So you've got this weird two-handed setup: Fed minutes sounding tight, Treasury trying to smooth the long-end market. Classic macro: one foot on the brake, one hand adjusting the radio. Coming up, we'll swing back to the movers and see what's actually holding bids.
Thanks, macro desk. All right, markets desk back on the movers board. And yeah, this board is still wild. Look at the context first. QQQ's red, small caps are red, VIX is pushing higher. And somehow we've still got HUIZ up over 150, SGLY still over 100, BTCT up 74. That's the game right now. Isolated momentum, not broad risk on. Quick scorecard too. HUIZ did tag that 3 level we flagged earlier. RITR cracked the 13-cent line, and SGLY lost 650. So now I don't want to chase old headlines. I want the next clean tape. BTCT is the one I'm pulling first. 41.8 million shares already, 342 times relative volume, and it's tied to the crypto pocket the macro desk just flagged. Okay, BTCT on the 1 minute. This is BTC Digital, crypto mining exposure, and that matters because the broad tape is soft, but crypto-linked names are still catching bids. Price is around 1.46, up about 74%, so the line I care about is simple. Can it actually own 150, or is 150 just the offer wall where momentum stalls? With 8.97 million float and 41.8 million shares traded, the float's already turned over multiple times, so this can move fast both directions. Under 1.40, I'd start treating it like momentum is thinning out. Above 1.50, then you want to see if buyers hold the bid instead of just one quick spike. Also, high dilution risk on the profile, so don't fall in love with this thing. It's a tape trade. Levels, volume, discipline. Now, Loop. This is the one fighting that clean psychology level right under $1. Price is around 98 cents, up about 58%, and the volume is not subtle. 28.4 million shares, roughly 150 times normal volume. So yeah, the board move is real, but the chart question is super simple. Does $1 turn into support, or does it stay a rejection spot? If it pokes over a buck and can't hold it, that's where these sub-dollar names can get really annoying. Quick wick, then everybody who chased the break gets trapped. If it bases just under it, builds volume, and keeps pressing back into that area, then at least the tape is telling you buyers are still active. Rotate over to Wedo now. Totally different price profile. This isn't a 10-cent grinder. This is sitting around 30 bucks, up about 46%. But the volume is way smaller at 1.56 million shares. Still active, still a big move, but on a higher price small float type runner, you've got to respect the spread. The danger here is the failed breakout. It clears 30, looks clean for 2 candles, then the bid disappears, and suddenly you're $3 away from where you thought the level was. So I'm watching that $30 area as the pivot. Above it, the chart can stay constructive. Below it, if the bounces keep getting sold, that's where momentum can cool off fast. OMH next. And this one is wild because the percent move almost undersells the volume story. Oh My Home is sitting around 10.8 cents, up about 31%, but the relative volume is over 3,100 times normal. That is absurd scanner traffic. Here's the catch though. This is basically a dime stock tape, high dilution risk on the board, recent filings, and if it can't stay above that 10-cent area, these names can turn into pure chop really fast. So I'm not hyping it. I'm watching the behavior around the dime. If buyers keep defending above 10 cents, fine, the momentum stays alive. But if it starts slipping under there, and every little pop gets stuffed, that's usually where the chase crowd gets trapped. Now, flip the board the other way. Onfo is the top loser. On folio around $1.56, down 34%, but notice the relative volume is only 0.42. So this isn't the same kind of insane participation we're seeing in the runners. This is more of a gap-down structure where sellers are in control until it proves otherwise. For me, the line is that 1.60 area. If it keeps sitting below 1.60 and every pre-market bounce gets sold, the chart is still heavy. A reclaim would at least change the tone short-term, but right now the tape is saying supply is still parked overhead. All right, TNON now. 10 in medical, second name on the red side. Medical device stock around 811, down just under 29%. And this is the spot where the chart gets really simple. $8 is the line everybody's staring at. If 8 keeps holding, okay, maybe you get some kind of pre-market bounce attempt. But if every pop back toward 850, 860 gets sold into, that tells you sellers are still leaning on it. Volume's about 310,000, relative volume under 1. So this isn't the same kind of insanity we saw on OMH or BTCT. It's down a lot, but it's not trading like a clean panic volume capitulation yet. So for me, 8 is the key read. Does it defend, or does it start accepting below there? Last one on the loser board. SURG, Surge Pays. Low price name here, around 17.9 cents, down 27%. And this one actually does have attention. 2.4 million shares, about 18 times relative volume. But this is exactly where you've got to avoid the trap of, quote, it's down so much it has to bounce. No, at 18 cents with high dilution risk on the board, the move can stay nasty and liquidity can get ugly fast. The level is that 18-cent area. If it can't reclaim and hold above there, the tape is still heavy. If it does reclaim, then you watch whether volume actually improves or if it's just a quick squeeze into sellers. All right. Let's snap back to the movers board and wrap the scan. Gainers still have the crazy volume. HUIZ, SGLY, BTCT, OMH. But the losers are telling you risk appetite is not clean, with TNON's $8 line and SURG's 18-cent line still in play. Broad tape's red. VIX is up. So this is a stock picker pre-market, not a free money tape. Coming up, we'll flip from the board into the next chart and see what's actually holding momentum.
Thanks, Markets Desk. Quick macro data check, because the small cap fireworks are fun, but the bond market is still holding the lighter. Right now, there's no fresh 830 economic print crossing this calendar, so the live data point is the tape itself. SPY is at 764.95, down about 0.5%. QQQ is heavier at 710.40, down 0.79%. And the Russell's basically the same. IWM 299.33, also down 0.79%. That tells you this isn't just one mega cap sulking in the corner. Risk appetite is softer across growth and small caps. And the reason again starts in duration. TLT is 82.12, down 1.08%, while IEF is 92.98, down 0.43%. So the long end is taking the bigger punch. That's the market saying, yeah, I hear the Treasury buyback story, but I still want a higher toll to own duration. Very macro, very annoying, but that's the bouncer at the door for equities this morning.
Thanks, Markets Desk. Quick check-in from the Stock Whisperer paper book. We just opened mRNA long, 35 shares, average 161.08. And it's basically flat right now. Last around 161, down about $2.80 in the simulated account. The thesis is pretty simple. Record squeeze reaction, real pre-market momentum, but I only want it if that first failure zone keeps holding. This is not a size up and pray trade. It's a small momentum position with defined risk. Quick mark on the rest of the book. MRVL long 35 from 229.68, basically unchanged, down $1.75. XLRE long 200 from 44.95, off about $12. So nothing dramatic here. Controlled book. 3 longs, all still inside their brackets. Now, the mRNA bracket is the important part. Take profit order is parked at 178.50. Stop is down at 153.40. And my soft watch line is 156. If this squeeze starts losing that area, I'm not pretending the tape still looks clean. MRVL's bracket is still 246.50 over 222.80. XLRE is 47.20 over 43.90. No changes from me there. On the watch list, AAPL is still earnings reaction only. 323 above is the strength trigger I care about. 312 below is where I don't want to force a long read. Again, this is the show's simulated paper trading portfolio, not something to copy. Coming up, we'll kick it back over to the news intermission and keep tracking whether mRNA can actually hold the bid.
Thanks, Stock Whisperer. All right, news brief time from the macro desk, and we're starting in energy. ProTerminal's newsroom is tracking S&P Global, moving Ovintiv's outlook to positive after the company reduced leverage. The headline is not flashy, but it matters. Lower debt pressure can mean better borrowing terms, and for an energy producer, that's real oxygen when crude is sitting around 135.95 and the sector is already living inside a very volatile commodity tape. Cleaner balance sheet, less financial squeak in the wheels? Boring, but in macro, boring sometimes pays the rent. Next up, SDC Capital is eyeing a $1 billion Singapore REIT IPO. Big REIT offerings are basically a live referendum on yield appetite, and this one lands while bonds are soft. TLT around 82.05, down a little over 1%. So the question for investors is pretty simple. Does the market want real estate income when rates are still applying pressure? A $1 billion raise says the sponsor thinks the answer is yes. The bond market may have a slightly less cheerful opinion, because of course it does. Copper story here. KGHM posted a stronger second quarter profit, helped by firm copper prices. That matters beyond one miner, because copper is the market's favorite little industrial lie detector. If pricing is strong, investors read it as demand holding up or supply staying tight, or both. For miners, the operating leverage cuts both ways. Great when the metal is moving your direction, ugly when it snaps back. So this is supportive for the metals complex, but it still lives and dies with the commodity cycle. Now Microsoft. The desk is seeing Microsoft hiring for a legal engineer role that blends legal work with AI build skills, with pay listed up to $279,000. Tiny headline? Maybe. But it tells you where the AI build-out is going next. This is not just chips and chatbots anymore. It's back-office workflow, compliance, legal review, commercial contracts. For MSFT, the investor angle is productivity and AI monetization inside boring corporate plumbing. And yes, apparently even the lawyers are getting compiled now. Last one. Cantor Fitzgerald has launched institutional prediction market trading. The facts are simple. a new platform aimed at institutions for event-based markets. Why it matters? If adoption grows, these markets can become another price signal around elections, policy outcomes, economic events, maybe even corporate scenarios. The key caveat is regulation and liquidity. Without both, it's just a fancy opinion box with a bid-ask spread. Big picture though, it fits the morning. Investors are hunting for hedges and signals, while SPY is around 764.5, QQQ around 709.9, and the VIX is parked near 19.4. Coming up, we'll flip back to the movers board and see where the tape is actually paying attention.
Thanks, Macro Desk. Markets Desk is grabbing the movers board. All right, look at this board. QQQ's down almost 1%. IWM's red, VIX is firm. And the top gainer is still doing absolute small cap nonsense. SGLY up 128% at 6.81, 27.3 million shares traded, 90 times relative volume. That's the headline runner. Right behind it, HUIZ up about 96% with a massive relative volume print. Then BTCT still green 80 plus. RITR is the penny stock volume monster on here. And then you've got FGL, Loop, Wedo rounding out the green side. So yeah, weak tape, but the momentum pocket is alive. We're not marrying any of these. Pulling SGLY first. This is the cleanest headline mover on the board right now. Oof, look at the scale of this thing. It's not just up big, it's trading way above normal activity. 27.3 million shares against a tiny average, and the float listed around 7.3 million shares. That's exactly why these can stretch like crazy and then snap back just as fast. Price is $6.81, so the obvious trader line is $7. If SGLY can actually reclaim and hold above 7, then you've got squeeze continuation pressure. If it keeps stuffing under that line, that's where this can get choppy fast. Also, Pro Terminal's showing high dilution risk here, so don't confuse a hot candle with a clean balance sheet story. This is a tape trade. Volume, VWAP behavior on the 1 minute, and that $7 reclaim, that's the scorecard. HUIZ is next, and this one is wild for a totally different reason. Insurance broker name China Exposure sitting at $2.86, up about 96%. But the relative volume number is the insane part. 2,024 times normal. That's 35.7 million shares against an average volume of basically 17,000. So yeah, that's not a normal little pre-market blip, that's a full liquidity event. On this 1 minute, I'm not trying to chase the headline. I'm checking the pullback behavior. If it keeps getting bought around the mid-280s and the candles aren't living under VWAP, buyers are still at least defending it. But if the tape starts printing lower highs and that bid disappears, these near 100% runners can fade super fast. Medium dilution risk showing here too. So I'm treating the move like momentum first, quality story second. Now BTCT, this is your crypto-linked strength on the board. BTC Digital, $1.52, up about 82%, and the volume is real. 45 million shares already, 369 times normal. Floats under 9 million. Dilution risk is marked high. So again, don't romanticize it. These things can move both ways like crazy. The clean line I'm watching on the 1 minute is that $1.50 area. If it's holding above $1.50 and pullbacks are getting absorbed, buyers still have control of the tape. If it starts spending time below there and pops get sold instead of dips getting bought, that's when it gets heavy. Crypto-linked small caps can look amazing on the board and still be pure flow trades, so the chart has to confirm every step. RITR now, and this is where the tone changes a bit. This is not a clean large cap trend read. This is a low teens penny stock volume event. 12 cents and change, up about 62%. And yeah, the volume number is huge. Over 300 million shares traded against a normal day under 600,000. So the attention is real. But with RITR, I'm way more careful with the wording. High dilution risk on the board, recent filings are flagged, and when something this cheap trades this much volume, you can get those nasty air pockets where it looks strong for 2 candles and then just rug pulls back through VWAP. So for me, the read is simple. Does it keep accepting above that low teens area, or is this just liquidity for trapped buyers? I'd keep 12 cents on the screen as the danger line. Below that, momentum can unwind fast.
Thanks, Markets Desk. breaking right now. Moderna is the headline. ProTerminal's newsroom is tracking Moderna, more than doubling after positive phase 3 results for its melanoma vaccine program with Merck. What we know, the stock's surge is tied to reported late-stage success, and that matters because this isn't just another vaccine headline. It's investors repricing the idea that mRNA can work deeper into oncology, not just infectious disease. What we don't know yet, the full regulatory path, the broader trial detail, the label discussion, timing, all the grown-up paperwork that usually shows up after the confetti cannon. Market read. In a tape where QQQ is down about 0.75% and VIX is near 19.4, this is very much single-name biotech ignition, not some clean all clear for risk assets. Next one, semis are still the stress point globally. The desk is seeing a semiconductor sell-off hit Asia hard, with South Korea's Kospi down around 5% and a circuit breaker halt triggered. That's not a little wobble. That's the market pulling the emergency brake and pretending it meant to park there. Why it matters? Semis are the transmission belt for AI, autos, phones, industrials. Basically half the modern economy with a power cable. So when that group cracks overseas, US names tied to the chip cycle, think ADI, AVGO, the broader tech complex, can feel that pressure in pre-market sentiment. And the bond market plumbing story. Treasury is doubling long bond buybacks to at least $4 billion per operation starting in September, up from $2 billion. The point here is liquidity and market functioning on the long end. Not a magic wand, not free dessert with every Treasury auction. Why investors care? Long yields drive the discount rate math for growth stocks, real estate, banks, utilities, all the rate-sensitive corners. With TLT still sitting around 82 and under pressure on the morning, this is the kind of policy plumbing headline that can matter even if it doesn't scream on the tape right away. Coming up, we'll kick it back toward the movers board and see what's actually holding bids after these headlines.
Let's talk Moderna doubles after melanoma vaccine success. The names actually carrying it right now, NVDA, and the rest of the group, AVGO, MRVL, AMD. The headline driving it, U.S. Treasury doubles long bond buybacks to at least $4 billion. I'm pulling up NVDA first to read the tape, then we'll rotate through the others. Who's leading, who's lagging, whether the whole group's moving together. This is the theme and the price action, not a call on any of them.
Thanks, company desk. All right, markets desk back on the movers board, and this tape is still heavy. SPY down about 0.5%, QQQ down 0.7, IWM soft, VIX green. So when something is up triple digits in that backdrop, yeah, it gets our attention, but it also gets the microscope. Top of the board, SGLY up 123%, HUIZ up 118, RITR still hanging around plus 76, BTCT plus almost 70, Loop plus 49, big numbers. Oof. But look at the difference in volume quality. HUIZ is showing more than 2,000 times relative volume. OMH lower on the board is even crazier on relative volume, while SGLY is 93 times. That's still monster activity, just not the same kind of nuclear print. We're going chart first here. SGLY first, then HUIZ and BTCT. Okay, SGLY on the 1 minute. This is Singularity Future Technology, small cap industrials name with the AI/blockchain angle in the description. And the board has it at 665, up 123%, 28 million shares traded. Float is only about 7.3 million, so that explains why the candles can get jumpy fast. We already got that earlier 650 downside tag on the scorecard, and now it's back above that area, so this is the repair test. If buyers are real, 650 needs to stop acting like air. Above it, bulls can keep trying to build towards 7 again. Below it, this turns right back into a squeeze fade. And keep the risk flag bright here. Dilution risk is marked high, and with this type of float, one nasty offering headline can change the whole tape. I don't have a VWAP read in the feed right here, so I'm not going to pretend. I'm using the visible price area and the board volume. 650 is the control line right now. 7 is the reclaim that makes shorts sweat. Hui is the crazy relative volume one, and I mean crazy. 2,259 times normal volume, trading around 3.18, up about 118%. So the question on this chart is pretty simple. Is $3 actually support now? Or did this just get rammed into the low threes and start getting sold into? If buyers keep defending above 3.00, that's a cleaner hold after a massive impulse. But if 3.00 starts slipping, these kinds of pre-market small cap moves can unwind fast because the whole trade is basically crowd momentum. Tiny market cap here too. Financial services, China insurance brokerage name. So I'm not treating this like a normal large cap chart. It's the tape, the volume, and that $3 line. Now RITR, this is the penny stock volume storm. 13 cents, up about 76%. But look at the share count traded. 311 million shares. That is not casual interest. That is full-on churn. And yeah, we already talked about the danger zone on this one, so I won't beat it to death. But low teen cents is where you have to be really careful. High dilution risk is flagged, recent filings are there, and when a stock at 13 cents is doing 541 times relative volume, the difference between momentum and distribution can be one ugly candle. For me, the low teens area is the line in the sand. If it keeps reclaiming and holding above roughly 13 cents, fine, the crowd is still involved. If it loses that and starts living under 12, that's where the fade risk gets loud. BTCT next, and this one's got that crypto-linked flavor so the tape can get real jumpy real fast. Price is sitting around 1.42, up almost 70%, and relative volume is 381 times normal. That's not casual interest, that's the whole room showing up. But the level I care about is 1.50. If 1.50 was the earlier control line, then after slipping under it, that can turn into reclaim resistance. So for me, this chart is pretty simple. Under 1.50, you've got a runner that's still strong on the day, but it's trying to prove it can take back control. Over 1.50 and holding, totally different tone. Fail there again, and you can get those quick small cap crypto name air pockets. Now Loop. This is a different personality. Sub-dollar materials name, around 92 cents, up 48.5%, with 159 times relative volume. So yeah, it's moving, but the levels are cleaner. 90 cents underneath, $1 above. That's the whole fight right now. If 90 cents keeps holding, traders are naturally going to stare at that $1 magnet, because every sub-dollar runner has that psychological line on the screen. But if it loses 90, that chase can cool off pretty quickly. especially with the broader market still leaning red. I don't want to glamorize a sub-dollar name. These can reverse hard, but compared with the total chaos in RITR, Loop is giving you a much cleaner level map. Alright, last one I want on the gainer side is WETO, because this is a totally different chart than the penny stock chaos we just hit. Pull this up on the 1 minute. This thing's around 30 bucks, up about 44.5% and doing 36 times normal volume. So yeah, still small float behavior, roughly 5.7 million float. But the way I'd frame this is cleaner level trading. It's not a 13-cent tape whipping around by fractions of a penny. Around 30, that round number matters. If WETO is living above 30 and volume keeps showing up, that's relative strength on a red tape. If it starts slipping back under 30 and can't reclaim, then this can turn into a pretty standard pre-market fade. Now, quick flip to the weak side. TNON and ONFO are both down about 34%, but notice the volume profile. TNON's only about normal volume. ONFO's actually below normal relative volume, so I'm not treating those like panic capitulation reads yet. They're weak, absolutely, but not the same tape as the monster volume gainers. And then OMH and TGHL, late board gainers, very risky stuff. OMH is barely over a dime, with 255 million shares traded and over 3,000 times relative volume, so that's pure danger zone liquidity. TGHL's up 28%, under a buck, high dilution risk as well. So the takeaway from this mover scan, in a heavy market, SPY, QQQ, IWM all red. The real standouts were SGLY, HUIZ, RITR, BTCT, Loop, and WETO. But the fade risk is real across the whole small cap board. Alright, we'll leave the movers board there and kick it forward into the next live hit. Alright, quick pull up on MMA, because this one just went full pre-market firecracker. Board had it up about 76%. And remember, the tape is soft. SPY red, QQQ red, IWM down almost 3/4. So this is pure single name momentum, not broad market love. On the 1 minute, this thing based forever around 39 to 40 cents. Tight, dead, no expansion. Then bang, it clears that 41 cent area and rips all the way to 72.38 cents. Oof, look at that wick. Volume confirmed it too. Around 896,000 on the first surge, then over 1.7 million as it pulled back into the mid-60s. So the read is simple. Base to parabolic. Now volatility. My scoreboard levels, below 60 cents, the breakout starts looking tired fast. Above 72.4, that's the high reclaim where momentum traders notice again. Now the catalyst check, and this is important. I don't see a fresh same morning press release in this feed explaining the pop. The latest company headlines are older. July 15th, expanded revenue opportunities with Zebra Athletics and a new e-commerce platform. July 1st, BJJ Link passing 17,000 monthly active users. And back in June, they said they terminated an equity line of credit with no drawdowns. Fine context, but not a clean this morning catalyst. So here at the markets desk, I'm treating the chart as the headline right now. Price and volume are driving this, not some obvious fresh news bomb in the feed. And because this is a small cap, we've got to check the supply side. MMA's market cap is only around 10.9 million. Price is under a buck. And the overview shows roughly 26 million shares outstanding. Then the dilution center gets loud. Overall risk tagged high. 2 active shelves. About 57.9 million raised over the last 12 months, and total raisable amount listed at 732 million. One nuance, that dilution snapshot is dated before the June equity line termination headline, so don't mix the timestamps. But the bigger point still stands. Overhead supply risk is absolutely part of this tape. So for MMA, I'm not chasing the percentage headline. I'm watching whether it can build a real new base after that parabolic wick, with 60 cents below and the 72-cent high above as the clean scorecard. Coming up, we'll snap back to the movers board.
Thanks, Markets Desk. Let's shift from those small cap rockets into an actual earnings name, GFI, Goldfields. This is on today's earnings list, time not specified, with EPS estimated at 2.75. And look, the broader tape is soft. SPY down 0.4, QQQ down a little more, VIX up. So a minor trading lower by about 1.5% at 43.18 is not totally shocking. But here at the company desk, the question is simple. What does this print actually change? On the 1-minute read we've got, 44 is the first obvious reclaim area after that early fade. And 43 is the support line traders are going to notice if sellers keep leaning on it. Okay, now the business story. Gold Fields is not a little explorer. This is a roughly $38.6 billion NYSE-listed gold miner, operating across South Africa, Ghana, Australia, Chile, Peru, with about 2.34 million gold-equivalent ounces of annual production in the company description. So when earnings hit, you're not just asking, did EPS beat? You're asking whether higher gold prices are actually converting into margin and free cash flow. The last reported Q4 numbers were big. Revenue around $5.29 billion, net income about $2.55 billion, EPS 2.85. Compare that with Q4 the year before, $3.08 billion of revenue, EPS 95 cents. That's a major step up. The platform growth line shows revenue up 136.7% year over year and EPS up 850%. That's the key fact. The skeptical read is, how much of that is sustainable operating improvement? And how much is commodity beta? Because if gold cools off, the market usually starts asking that question pretty quickly. The latest company-specific headline I care about is not even the earnings print yet. It's the Founders Metals update from yesterday. Gold Fields increased its strategic stake to 19.9%, tied to the Antino Gold Project story. That's not the same thing as a quarterly earnings beat, obviously, but it matters for the longer-term narrative. Miners need reserve life, project optionality, and places to deploy capital without wrecking the balance sheet. So the clean version is, earnings tell us how strong the current gold cycle is flowing through the P&L. Project stakes tell us whether management is trying to extend that runway. I'm not going to overstate it. This does not instantly change near-term earnings power, but it is the kind of move investors file away when they're judging whether a miner has more than just spot gold exposure. So into the print, the setup is pretty clean. Analysts have mostly been sitting with constructive to neutral ratings in the data. JP Morgan maintained overweight, Citi maintained buy, RBC maintained outperform. But you also had hold-type downgrades from Canaccord and HSBC last year. Translation: the street already knows this is a quality gold name, so the bar is not invisible. On filings, it's a foreign issuer profile, with recent 6Ks and a 20F earlier this year, so any fresh update from management matters. I'd keep the chart really simple. Above 44, the tape starts repairing the earnings day fade. Below 43, that support zone gives way, and the market is saying the print or the setup isn't enough yet. Coming up, we'll hand it back into another market mover scan and see what's still actually trading with volume.
Thanks, company desk. Top of the hour, quick market minute if you're just joining us. It's 9:02 a.m. Eastern, and the tape is leaning risk off, but not full fire drill mode. SPY's at 766.08. down 0.39%. QQQ 712.25, down 0.53. IWM 299.62, off 0.70%. So small caps are taking the bigger punch. VIX is 19.27, up 1.15%. Volatility's awake, basically sitting up in bed with coffee, not kicking the door down yet. The story driving the morning is still that pressure in semis and growth, while oil is doing the opposite thing you want if you're hoping for an easy inflation narrative. Oil's up 3.37% to 135.32. So yeah, growth is heavy, energy is bid, and the market's inflation antenna is back up. Now, the cross-asset tell matters here, even if you only trade U.S. stocks. Bonds are not exactly bailing out the tape. TLT is 82.32, down 0.84%, and IEF is 93.03, down 0.37%. So even with the Treasury buyback story floating around as a potential cushion, the live bond tape is still saying rates matter. Dollar's basically flat at 27.89. Yen is weaker with FXY at 57.81, down 0.36%. Gold's lower at 409.52, down 1.04%. And then crypto is oddly the kid in the corner doing cartwheels. BITO up 4.65%, Coin up 4.87%, MSTR up 8.77%. So, this is not a clean hide under the desk tape. It's messy rotation. Semis heavy, oil hot, bonds soft, crypto beta alive. Here at the macro desk, I'm watching QQQ 710 as the floor, 714.90 as the upside line, VIX 20 as the risk thermostat, oil holding 135, and the 12:30 Eastern data double shot, Philly Fed and jobless claims. Coming up on the rundown, market movers scan, a quick pro terminal tour, then another pass through the movers board.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board, and yeah, this board is still wild. Broader tape is not helping anybody. SPY red, QQQ red, IWM down harder, VIX pushing 19 and change. So when you've got SGLY still up 125%, UIZ up 115%, MMA up 97%, that's not market lift. That's pure single name action. Also, quick score check. HUIZ did tag that $3 level we flagged earlier. RITR did push through 13 cents, and BTCT lost 150. Good levels. Now the question is, which of these are still holding bid, and which ones are just pre-market air pockets waiting to fade? We're going chart by chart. Let's start with SGLY, top of the board. This thing is at 6.71, up 125%, almost 28.8 million shares already, and relative volume around 96 times normal. That's real attention. Small float too, roughly 7.3 million shares, so it doesn't need much to whip around. On the 1 minute, what I care about now is whether this can actually build above the mid-sixes instead of just throwing wicks. Oof, look at that. When these candles stretch and snap back, that's where late chasers get punished. The clean upside magnet is $7. Nice round number, obvious tape level. If it can base under it, different story. If it pops 7 and instantly rejects, that's a classic small float trap look. Downside, I'm using 670-ish as the short-term line in the sand right here, just because that's where the board price is living. Below that, momentum starts looking messy fast. And keep the dilution tag in the back of your head. The board has SGLY marked high dilution risk, so even when the chart is hot, this is not a clean blue chip momentum read. HUIZ is next, and this is the one where the volume number is just silly. It's at 3.15, up about 116%, 47 million shares, and relative volume over 2,600 times normal. So yeah, the crowd found it. The clean line here is $3. If this is real momentum, I want to see the tape keep accepting above 3, not just wick over it and immediately give it back. Right now, with this much volume, a $3 reclaim holding is a totally different look than a $3 rejection. Above it, buyers are still in control. Back under it, especially if the candles start stacking lower highs, then that turns into trap territory fast. Flip over to MMA now. Totally different price zone, but same squeeze board personality. This thing's sitting around 75 cents, up 97%, with about 19.3 million shares traded and relative volume just over 70 times. The spot I care about is that 75-cent area. If it reclaims and sits, fine. That's stabilization after the spike. But if 75 keeps acting like a lid and every bounce is getting sold faster, that's exhaustion showing up. And remember, this one's got high dilution risk on the board. So for these sub-dollar runners, I'm way more interested in clean volume holding VWAP than I am in chasing a headline candle. BTCT now, and yep, there's the follow-through on that 150 breakdown we were talking about. It's at 144, still up 72%. So don't get it twisted, this is not dead on the day. But the character changed when it couldn't hold 150. Volume is real, almost 48 million shares, about 390 times normal, and with an 8.9 million float, that's why it can move like this. But for me, the repair level is super obvious. Back above 150 and hold it. Until then, every pop into that area can just be trapped momentum. And because this is crypto-linked, it can get twitchy fast if the crypto bid cools off. Now, WETO, totally different beast. This is not a sub-dollar squeeze lane. This is a $31 stock up about 49%. Volume's only 1.7 million, but relative to its normal tape, that's still huge, about 38 times average. So the move does have a tension behind it. What I'm watching on this one is whether the pullbacks are orderly or if the bids just disappear. Higher-priced low-float movers can look clean for 3 candles and then air pocket $2. So I don't want to over-glorify the chart. If it's holding the low 30s with volume still coming in, okay, that's constructive. If it slips back under 30 and volume dries up, then this starts looking more like a thin pre-market spike than real sponsorship. Last one on the board here, Loop. This is the sub-dollar momentum update. And honestly, this is the cleaner one to watch versus some of the absolute danger tape lower down. It's around 89.90 cents, up about 45%, 31 million shares, relative volume 165. So yeah, the $1 magnet is still there. Traders love that big round number, but it's only realistic if this thing can keep accepting above 90 cents and not just wick into it and rug. If 90 turns into resistance, then the chase gets way less interesting, and I'd be watching that mid-80s area for the first real loss of momentum. Now, quick sweep before we hand it off. Ritter is real volume, no question. 317 million shares, up 71%, but it's a 13-cent stock with high dilution risk, so that's pure danger tape. Onfo is the opposite, down 35%, only about half relative volume, so I'm not treating that like a hot momentum name right now. TNON, down 33% on basically normalish volume, high dilution risk there too, so that's more damage control chart than squeeze chart. And OMH, huge volume, 257 million shares, up 30%, but it's basically sitting right above a dime with high dilution risk. That's not something I'd want to romanticize. Near dime names can flip nasty fast. Alright, that's the squeeze check. Coming up next, we'll rotate off the board and hit the next story on the tape.
Alright, quick pit stop. This whole desk is running through ProTerminal, and this is why we lean on it so hard. First up, Dilution Center. This is the page the markets desk uses when a small cap starts ripping, and the question is, okay, cool move, but what's sitting overhead? Shelves, ATMs, offerings, active registration risk. Not a buy or sell button, just the stuff you absolutely want on the screen before you chase a candle. Now flip back to the movers board. This is the heartbeat in the pre-market. You've got HUIZ up huge, SGLY still on the board, BTCT fading around that $1.50 area, MMA cooling after the spike, and the tape behind it is red. SPY down about 0.4, QQQ down a little over 0.5%, IWM heavier. So the board gives you the first filter. What's moving? How much relative volume is behind it? And is it actually strong versus the market, or just a quick squeeze that's already losing air? And then when a ticker grabs your eye, you don't just stare at the percent gain. Pull the profile. I'll use OMH here. Filings first, because filings tell you what the company is actually putting in front of the market. Then insiders. Who's filing? Who's transacting? What's changed? Sometimes it's clean, sometimes it's messy. Either way, that context matters. Data can be incomplete or delayed, yeah, but having it one click away beats guessing from a headline. Last piece, the 1-minute terminal chart. This is where the tape either confirms the story or exposes it. Candles, volume, VWAP behavior, wicks, failed reclaims, oof. That's the stuff we're reacting to live all morning. So yeah, everything you're seeing here, movers, charts, dilution, filings, insider data, that's ProTerminal. It's research, it's educational, it's not a magic trade signal. If you want the same setup on your screen, sign up at proterminal.io. Coming up next, we're right back to the movers board.
Alright, markets desk, back on the movers board. Quick reset, because the tape is soft and these small cap names are still flying. SPY is down almost 0.5%, QQQ off a little more than 0.6, IWM weaker, VIX up at 19 and change. So relative strength matters, but so does trap risk. Top of the board, HUIZ still massive, up about 138% on ridiculous relative volume. SGLY right behind it, up 119%, and that one's got the cleaner, higher dollar price tag. BTCT, Ritter, MMA, all still alive. All very different quality of tape. We're not marrying any of these. We're reading volume, wicks, and whether buyers are actually holding levels.
Thanks. Markets Desk. Breaking right now from the Pro Terminal newsroom. U.S. producer prices were unchanged in July. Headline PPI for final demand came in flat, versus forecasts looking for a 0.2% rise. So the first read is simple. Wholesale inflation cooled more than expected at the headline level. What we know, that takes a little heat out of the inflation impulse. What we don't know yet, whether the details are clean enough to change the whole rate story. And the market is treating it like a rate-sensitive headline, but not a full all clear. S&P futures tone is still soft. SPY around 765.7 and down 44 basis points. VIX still parked near 19.27. In other words, the smoke alarm got quieter, but nobody's throwing away the fire extinguisher yet. Next piece of the same report, and this is the part the macro desk cares about. The underlying inflation detail is stickier. Core PPI, excluding food, energy, and trade services, rose 0.4%. That's not a tiny number. So yeah, headline flat looks friendly, but the plumbing underneath is still pushing some pressure through the system. Why it matters? This is exactly the kind of split report that can make bonds grumpy. You've got a cooler headline, but services and margin-type categories can still complicate the easing narrative. That's why I'm not calling this a victory lap for risk assets. TLT is down about 0.8%. IEF down about 0.4%. The bond market is basically saying, nice headline, show me the receipts. Very bond market behavior. Zero joy, full spreadsheet. Third headline. The PPI print is taking some pressure off the dollar and cooling rate hike bets at the margin. The dollar basket we're tracking is basically flat, around 27.89. So this is not a dramatic FX dump, more of a recalibration. That matters for the whole board. Dollar, rates, gold, oil, crypto, they all trade off the same oxygen tank. Gold is still lower. GLD around 409.5 and down just over 1%, while oil is the annoying wrinkle here, up more than 3%. So the macro read is mixed. Softer producer prices help. Sticky core and hot oil push back. Coming up, market overview can put this straight into the index tape and sector map. Thanks, Markets Desk. All right, macro lens on the whole board for a second. The equity tape is leaning lower, not falling apart. SPY 765.52, down 0.46%. QQQ 711.70, down 0.61%. IWM 299.19, down 0.84%. And VIX is 19.28, up 1.21%. The tell is the Russell is worse than NASDAQ. NASDAQ is worse than the S&P. That's the market trimming the financing-sensitive stuff first, not exactly sprinting into the bunker. And the reason is pretty clear. Bonds are not helping. TLT is 82.25, down 0.93%. IEF is 93.08, down 0.33%. So long duration is taking the bigger hit. When long bonds are red and oil is green, equity multiples get that little "who invited this guy" look, especially growth. So even if you only trade the small cap runners, this is the weather system sitting over the candles. Oil pressure, rate pressure, and buyers being picky. Now, cross-asset, this isn't a clean hide under the desk morning. The dollar proxy is basically flat at 27.89, up 0.04%, but the yen proxy is weaker at 57.81, down 0.36%, so that global rate differential trade is still humming in the background. Gold's not getting much of a safety bid either. Gold proxy 410.16, down 0.89%, while oil is the loud one, 134.73, up 2.92%. That's the annoying part, right? If oil holds around that 135 zone, inflation stays the guest who refuses to leave. And then crypto beta is doing its own jazz solo. Bito up 5.3%, Coin up 6.05%, MSTR up 9.43%. Crypto link stuff is volatile, so I wouldn't treat that as broad risk-on confirmation, but it does say speculation isn't dead. Here at the macro desk, I'm watching QQQ 710 below and 713 above, VIX 20, TLT around 82, oil around 135, then the 1230 prints, Philly Fed estimated 25, jobless claims estimated 210, because that's where the next shove can come from. All right, quick wide-angle check from the macro desk. This tape is risk-off, but it is not kicking over furniture yet. SPY's around 765.43, down 0.47%. QQQ 711.45, down 0.65%. Russell's weaker at 299.24, down 0.82%. And VIX is 19.28, up just 1.21%. That combo matters. Stocks soft, small caps worst, fall higher, but not screaming. Under the hood, bonds are doing the heavy lifting of the story. TLT's at 82.25, down 0.93%. IEF's down 0.33%, so the rates impulse is still leaning on growth after that mixed inflation read. And when duration gets pinched, NASDAQ feels it first. QQQ is parked around 711 with 710 underneath. Not a forecast, just the floor the tape keeps staring at like it left its keys there. Now, cross-asset, this is where it gets a little weird, which honestly is macro's whole personality. The dollar proxy is basically flat at 27.89, up 0.04%. But the yen proxy is weaker again at 57.81, down 0.36%. Even if you only trade US stocks, the yen matters because carry trades are the plumbing. Boring, until water comes through the ceiling. Oil is the pressure point. USO around 134.73, up 2.92%. And yeah, that 135 area we flagged earlier got tagged and then faded just under it. That's the inflation tax showing up in real time. Gold's not catching a safety bid either. GLD 410.16, down 0.89%. So this is more rates plus oil pressure than bunker mode panic. Crypto's the outlier. BITO up 5.3%, Coin up 6.05%, MSTR up 9.43%. Speculation has not left the building. Here at the macro desk, I'm watching QQQ 710, VIX 20, USO 135, TLT 82, and that 1230 Philly Fed plus jobless claims combo. All right, macro desk into the bell. This is the 10-minute weather map before the first real print. SPY's sitting around 765.43, down about 0.5%. QQQ 711.45, down 0.65%. IWM 299.24, off 0.82%. And VIX is 19.28, up 1.2%. So yeah, risk is turned down, but it's not a fire drill. The thing I care about here, bonds are not cushioning it. TLT 82.25, down 0.93%. IEF off 0.33%. So rates are still leaning on the growth trade. Dollar's basically flat at 27.89 on UUP. Yen's softer with FXY down 0.36%. And oil is the loud kid in the room. USO 134.73, up almost 3%. Gold's lower too. GLD 410.16, down 0.89%. So this isn't classic hide under the desk risk off. It's more like oil pressure up, rates pressure up, NASDAQ mood ring looking grumpy.
Thanks. Macro desk. All right. Markets desk jumping straight into JZ. This is the clean quick hit name on the movers board right now. Jiangji Education, small cap China Education Tech. Board price around 3.21, up about 89%. Relative volume near 19 times. And oof, look at the structure from the 1-minute read. Early flush from about 1.81 down to 1.60, then it just sat in that 1.62 to 1.75 box forever. That was the base. Then late volume came in and it went vertical, 1.80 through 2.23 on big bars. That's not a grind, that's a momentum burst.
Here's the thing, though.
This is already extended versus that original range. The old chart high from the candle read is 2.23, but the live movers board has this up near 3.21, so we're dealing with a fresh extension above the prior spike area. The next obvious scoreboard level is 3.28. That's the listed year-high area from the profile data. If JZ can actually accept above 3.28 with volume, that tells you buyers are still pressing. If it rejects and loses $3, that's where the tape can get sloppy fast. Low float helps the squeeze. Float is about 4.47 million, but it cuts both ways. Same reason it rips is the same reason it can rug. Quick catalyst check. Recent headlines include an ADS ratio change plan on July 1, a $5 million registered direct offering that closed in June, and an earlier C-Art AI agreement headline. So yeah, you've got the AI-adjacent headline history, but for this move, the tape is the story, and risk is not small here. Dilution Center has JZ marked high risk, 2 active shelves, an active equity line, roughly 8.5 million raised over the last 12 months, and about 20.3 million still raisable. So Markets Desk read, respect the volume, respect the 3.28-year high test, but don't pretend this is clean blue chip tape. Coming up, we'll hit the news intermission and see what else is crossing. All right, let's run the board. Here's what's actually moving. Singularity Future Technology Limited, SGLY, is up about plus 127.2% on roughly 101.5 times its usual volume. Huize Holding Limited, HUIZ, is up about plus 124.0% on roughly 3,047.9 times its usual volume. BTC Digital Limited, BTCT, is up about plus 86.4% on roughly 408.7 times its usual volume. Let's take the top names one at a time on the 1 minute. SGLY first. Singularity Future Technology Limited. SGLY is up about plus 127.2% on roughly 101.5 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading. HUIZ first. HUIZ Holding Limited, HUIZ, is up about plus 124.0% on roughly 3,047.9 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading. BTCT first. BTC Digital Limited, BTCT, is up about plus 86.4% on roughly 408.7 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading. All right, let's run the board. Here's what's actually moving. Jianzi Education Technology Group Company Limited, JZ, is up about plus 150.0% on roughly 302.6 times its usual volume. Huize Holding Limited, HUIZ, is up about plus 70.5% on roughly 3,217.7 times its usual volume. Raytar Logtech Holdings Limited Ordinary Shares, RITR, is up about plus 69.7% on roughly 562.8 times its usual volume. Let's take the top names one at a time on the 1 minute.
All right, cash markets open. This is the first real print, not the pregame tape anymore. SPY sitting around 766.4, down about 1/3%. QQQ 713.3, down about 4/10. And the Russell's the laggard again. IWM 299.6, off 7/10. VIX is only 19.14, barely green. So this is not panic. This is more like the market opening the fridge, seeing rates and oil staring back at it, and slowly closing the door. Here's the whole macro chain. Long bonds are still under pressure. TLT 82.25, down 0.93%. IEF 93.08, down 1/3. That matters because if duration is getting hit right at the open, the Nasdaq can bounce, sure, but it has to do it with a little ankle weight on. The dollar's basically flat at 27.89, so this is not some giant dollar squeeze, but the yen proxy is lower at 57.81, down 0.36%. And even if you only trade US stocks, keep that on your screen. Yen weakness can be the canary for global rate stress. Then commodities. Gold is lower, GLD 410.16, down 0.89%, while oil is still the loud one, USO 134.73, up 2.92%, hovering around that 135 line we've been yelling about. So the opening message is pretty clean. Risk isn't falling apart, but inflation-sensitive stuff is pushing back. The macro desk translation. The market wants dessert, but rates and crude are standing by the buffet with a clipboard. Now, first movers out of the gate. And yeah, the small cap fireworks department showed up early. JZ is up around 150% at 425, with roughly 303 times relative volume. RITR up 106% near 16 cents. HUIZ still up about 70% with monster relative volume over 3,200. BTCT up 65%. WETO up 53%. That's a lot of heat while the actual indices are red. So relative strength is real, but it's opening minute heat. Not the same thing as a clean macro risk on tape. And look at crypto beta. BTO up 5.3%, Coin up 6%, NSTR up 9.4%. That's the weird split this morning. Nasdaq is soft, small caps are choppy, but crypto-linked names are acting like they drank 3 coffees before the bell. Fun to watch, dangerous to overgeneralize. So here's what I'm watching into the next hour. 1. QQQ is back around that 713 reclaim zone, and the opening spike high near 714.90 is the next clean upside line. If buyers can't hold the 713 area and it slips back towards 710, that tells you the open was more squeeze than sponsorship. 2. IWM 300. Simple, ugly, important. Above 300 and small cap pressure eases a little. Below it and financing sensitive beta keeps dragging. 3. VIX 20 is still the risk thermostat. We're at 1914, so nobody's screaming yet. 4. TLT 82 and USO 135. Bonds and oil are the macro tug of war. And don't forget, 12:30 Eastern, we get Philly Fed, estimate 25. And jobless claims, estimate 210. Then leading index at 2 o'clock, estimate 0.1. Coming up, we'll hit the news intermission and see which headlines are actually moving this tape, not just waving from the sidelines. Thanks. Markets Desk. Quick news brief from the macro desk, and we're starting with the big one. Market retreats as investors fret over the Fed tone, even with producer prices easing. The fact pattern is pretty simple. Stocks had been pressing record highs, but the tape is pulling back because traders are not treating one softer inflation headline as a free pass. Why it matters. If Fed messaging stays hawkish, duration gets taxed, growth multiples get questioned, and the S&P sitting around 767 with QQQ near 714 tells you this is a valuation rate conversation, not some mystery ghost in the machine. Next headline, Apple reports fiscal third quarter revenue of $109.4 billion, up 16% year over year, with gross margin at 50.1%. That's a big number, and it matters because Apple is not just another earnings print. It's a consumer demand read, a supply chain read, and a mega cap index weight read, all wearing the same black turtleneck. For investors, the question is how much of that strength offsets the broader pressure from rates. Because in a soft tape, mega cap quality can still get judged against the bond market. Biotech headline now. Moderna is surging after positive melanoma vaccine trial results tied to the Moderna-Merck program. What happened? The data is being read as a meaningful win for Moderna's oncology vaccine pipeline. And that's why mRNA is back on the screen after being pretty unloved by a lot of investors for a while. Why it matters. Biotech moves on probability changes. Trial success can reprice the pipeline fast, but the market still has to wait on regulatory path, approval timing, and whether this becomes a real commercial product. Over in Asia, foreign investors bought 8.3 trillion won of Samsung and SK Hynix across 5 straight sessions. That is a serious chip sector flow, not just a one-day tourist photo. Why it matters? It points to renewed confidence in Korean semis, especially with AI memory demand still the spine of the tech trade. Here at the macro desk, I care. Because when capital flows into memory and AI infrastructure, it feeds the same global risk appetite that shows up in names like NVIDIA, AMD, and the broader NASDAQ complex. Last one for this brief. Surging U.S. diesel prices are back on the inflation radar. The desk is tracking diesel pressure filtering through transportation and production costs. And with the oil proxy around 134.7, up almost 3%, this is not just a gas station headline, it's a margin headline. Why it matters? Freight, food, industrial inputs, all of that can get dragged around by diesel. So if equities want a calmer inflation story, energy needs to stop behaving like it found an espresso machine. Coming up, we'll hand it back into another market mover scan and see which names are actually ignoring this macro chop. All right. Quick pro-terminal news brief. Let's hit the wires and keep the macro map in focus. First up, economist David Rosenberg is warning that the U.S. growth slowdown is already happening, not just sitting out there as some future risk. The point here is pretty simple. If the economy is cooling now, growth-sensitive pockets have less room for error. And you can see why traders care this morning. SPYs around 767, IWMs under 300, and bonds aren't exactly throwing a parade, with TLT near 82.45. Slower growth plus sticky rates is the market's least favorite sandwich. Next headline. Unitree stock rocketed 460% in its Shanghai debut, putting the robotics company around a $51 billion valuation. That is a monster open, and yeah, it tells you investor appetite for AI plus robotics is still very real. But the macro desk translation is, when a fresh listing does 5 times out of the gate, you're also looking at volatility and valuation risk, not just innovation. IPOs can trade thin, fast, and emotionally. Basically a treadmill with a rocket strapped to it. All right, breaking macro wire first. Japan just confirmed joint FX intervention with the U.S. Japan's finance ministry says it conducted coordinated yen buying intervention to curb excessive yen volatility. And the message is pretty direct. They won't hesitate to do more if needed. What we know, this was official, coordinated, and aimed at the yen. What we don't know yet, the exact size, the exact timing details, or whether there's another round sitting behind it. Market read right now is not full panic. SPY's around 767.5, QQQ 714.3, VIX 19.14. But FX intervention is one of those headlines that can hit before equities finish reading the memo. Yen proxy is still sitting around 57.82, down about 1/3%. Dollar proxy, basically flat, near 27.89. So here at the macro desk, I'd call this a policy shock headline, not yet a broad risk break. Related headline: the Bank of Japan left rates unchanged at 1%, while all this yen intervention talk is swirling. That matters because you've got the classic split screen. The central bank holds the policy rate steady, while the currency authorities step into the market because the yen move got too disorderly. That's not a tiny detail for global portfolios. It touches Japanese exporters, dollar-yen hedges, and the bond market plumbing. And yes, I know, macro always finds a pipe to complain about. TLT is still around 82.45, just above that 82 line we flagged earlier. So the rate side of this story is still alive too. Next big one. Bitcoin fell below 79,000 after a wave of crypto liquidations. The important word there is liquidations. That's forced deleveraging, not just people changing their minds over coffee. Crypto is highly volatile and still a much less regulated corner of the market, so these moves can get mechanical fast. The weird part on the live equity tape, crypto proxies are green right now. BITO near 9.62, Coin around 167.45, NSTR around 110. So don't assume the spot headline and the US-listed crypto equities have to trade tick for tick intraday. They can squeeze, gap, and detach. Coming up, we'll kick it back to the movers board and see what's actually getting chased at the open.
Thanks, Macro Desk. All right, Markets Desk grabbing the movers board right here. Tape is a little heavy. SPY down 1/4, QQQ down about 4/10. IWM still the laggard, under 300. And that matters because these small cap movers are not waiting for permission. Look at this top row. JZ up about 167%, nearly 983 times relative volume. That is wild. BTCT still up 64% with almost 59 million shares. Huai's 63 million shares and 3,500 times relative volume. Oof. Then WETO, MMA, Loop all still green, while SERG and TNON are the ugly side of the board. So this is not a sleepy open. This is a stock picker, volume chaser open. We're going ticker by ticker, fast. Let's pull JZ first, because this is the scorecard name now. We flagged that 328 break earlier, and yeah, it hit, clean. Current board price is around 455, up 167% on 12.4 million shares versus basically no normal volume. That's the whole story. Tiny float, huge relative volume, and now the question is whether the tape can keep accepting price above this 450 area, or if that breakout turns into a rug pull. Watch the wicks here. If buyers keep stepping in above 450, momentum traders stay interested. If it loses 450 and starts snapping back through offers, that's where this gets sloppy fast. And remember, this one has high dilution risk on the board, so here at the Markets Desk, I'm treating this as a trade the tape name, not a victory lap. BTCT next, and this one's your crypto beta runner on the board. We're at about $137, up 64%, and the volume is just stupid for this name. 59 million shares traded versus normal volume around 122,000. So yeah, the tape is heavy, IWM's red, but this little crypto mining proxy is still getting chased. The level I care about here is that prior $150 area. If BTCT is underneath 150 and the candles keep projecting into it, that's sellers using the pop. If it actually reclaims 150 and holds above it for more than one little wick, then the character changes a bit. For now, I'm treating 150 as the line. Reclaim or reject, that's the whole read. Now, HUIZ, this is the freaky volume 1, insurance broker financial services name, trading around 236, up about 61%. But the relative volume is the headline, 3,591 times normal. That is not a typo. We already had that 330 downside level trigger earlier, so now I'm not asking, is this strong? I'm asking, is the bounce real or is it just a lower high trap after the flush? Big difference. On the 1 minute, if this keeps bouncing and failing below that 330 breakdown zone, that's still a broken runner. If it starts building higher lows and volume comes back in on the green candles, okay, then you've got an actual squeeze attempt. But with volume this extreme and shares outstanding this tiny on the data, these can snap both ways. Watch the 250 area now as the near-term reclaim test, and if $2 goes, that bounce probably gets a lot shakier. Wedo is the different animal on this board. This isn't a 50-cent grinder. This thing's trading up around $31, up about 50%, and the relative volume is 47 times normal. Big number, yes, but after looking at Jay-Z and Whois, it's not the same totally ridiculous volume imbalance. So on this 1 minute, I'm checking. Is this controlled higher low trend action, or is it just a thin spike that can air pocket 5 points? For me, 31 is the first line. If it keeps accepting above 31, okay, buyers are still defending the move. If it loses 31 and starts trading heavy under that, then you've got to respect that this higher priced mover can unwind a lot faster than the penny names because the dollar ranges are bigger. Now, MMA. This is back to pure sub-dollar momentum. 56 cents, up basically 49%. 65 million shares already. That's real tape activity, not just a cute little pop. But this is also the kind of name where you have to separate the chart from the risk. High dilution risk, small market cap, Amex-listed leisure combat sports story. And when these get crowded, the reclaim fail around VWAP is everything. I'm watching the mid-50s right here. If it reclaims and holds around 56, you can see why momentum traders keep it on screen. If it pops, stalls, and snaps back through that area, that's the classic trap. Everybody chases the green candle. Then the lower high comes in and liquidity disappears. So yeah, volume is huge, but I don't want to confuse huge volume with clean structure. Last gainer on the loop here. Literally, loop. This one's trading around 88 cents, up about 42%. 36.5 million shares, so yeah, real attention on it. But remember the level from earlier, that 85-cent downside hit already happened. So now the whole read is, does this reclaim actually stick, or is this just another lower high trap after the flush? For me, 90 cents is the cleaner reclaim spot on the tape, and 85 is the uh-oh line if it loses it again. Alright, quick red side rotation before we hand it off. Surg first, 15 cents. Down almost 39%, and 10 million shares with relative volume near 80. That looks like real liquidation pressure, not just a sleepy fade. TNON is also ugly, down about 38% at $7. But volume's only around 2 times normal, so I'm treating that a little differently. Still weak, still high risk, just not the same panic volume profile as Surge. And then mRNX, important distinction. That's a daily target 2 times long mRNA ETF. So a 34% drop there is not the same thing as an operating company blowing up. That can be leveraged product reset noise tied to the underlying move. So net-net, the heat is still in the tiny momentum names, while the broader tape's a little heavy. IWM red, VIX green, and that means these charts can rip and rug pull fast. Movers board is tagged. Let's keep rolling into the next check.
All right, quick pro terminal pit stop. This is the stuff the markets desk is using live. Right here, not screenshots, not stale notes. First stop, dilution center. This is where I want eyes on shelves, ATMs, offerings, all that paper risk that can smack a small cap chart out of nowhere. Especially on a morning like this, with SPY red, QQQ red, IWM still heavy. If a tiny name is ripping, I want to know what's behind it and what can hit the tape next. Then, we jump right back to the movers board. Boom! Gainers, losers, relative volume, price, market cap, the whole heat map of the morning. This is not a buy signal board. Don't use it like that. It's a triage board. Jay-Z, Whois, BTCT. Names like that popping up with monster relative volume. That tells us where the action is. Then we go verify it on the chart and in the filings. Fast filter. Less noise. Now watch the workflow on one name. I'll use CIRC as the demo, just a research example. Pull the profile, hit filings first. That's where the real homework lives. Recent registrations, prospectuses, 8Ks, anything that changes the risk profile. Then insider trades, same idea. I'm not trying to make a call off one tab. I'm trying to stack context. What's the company saying? What has been filed? Who's transacting? And is the market actually reacting to it? That's the edge of having the data in one place. And then we finish where the market's desk basically lives, the 1-minute terminal chart. Candles, volume, wicks, failed breaks, VWAP behavior. All of it in real time. Oof, that's the workflow. Board finds the move, filings explain the risk, chart tells you whether the tape agrees. If you want the same setup we're using on stream, movers, charts, dilution, filings, insider trades, it's ProTerminal. Go to proterminal.io. Educational tool, research platform, no magic button. But yeah, it makes the process way cleaner. Coming up, we'll flip right back into the market mover scan.
All right, let's run the board. Here's what's actually moving. Jiangji Education Technology Group Company Limited, JZ, is up about plus 133.5% on roughly 1,374.2 times its usual volume. Mixed Martial Arts Group Limited (MMA) is up about plus 69.7% on roughly 294.8 times its usual volume. Webus International Limited Ordinary Shares (WETO) is up about plus 63.2% on roughly 57.8 times its usual volume. Let's take the top names one at a time on the 1 minute. JZ first. Jiangji Education Technology Group Company Limited (JZ) is up about plus 133.5% on roughly 1374.2 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading. MMA first. Mixed Martial Arts Group Limited (MMA) is up about plus 69.7% on roughly 294.8 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading. WETO first. Webus International Limited Ordinary Shares (WETO) is up about plus 63.2% on roughly 57.8 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading.
Let's zoom out to the whole board. Dow, S&P, the Nasdaq, and the Russell. Here's what matters. Is this a rally being carried by everything, or just the mega cap generals charging while the small cap soldiers stand around asking, "Are we sure?" Brett tells you which. Watch the VIX for how much fear is priced in. Quick look at the cross-asset tape. Gold down 0.6%, oil up 2.8%, the dollar up 0.0%, bonds TLT down 0.8%, Bitcoin via BITO up 4.7%. That's the tone of the tape. Not a market call, just reading the weather. All right, macro desk is going wide angle here because the single name tape is noisy, but the cross-asset message is pretty clean. Stocks are red, but not in crash mode. SPY around 766.13, down 0.38%. QQQ 712.09, down 0.56%. And the Russell's the weak kid at the picnic again. IWN 298.59, down just over 1%. VIX is 19.3, up 1.3%. So volatility is awake, not screaming. The tell underneath is bonds. TLT down 0.85%, IEF down 0.43%. That's the market saying yields are leaning higher, and higher yields are basically ankle weights for long-duration growth. So when QQQ is still under that earlier 714.90 marker, and IWM is still below 300, the bounce can look decent candle to candle, but the macro plumbing is not exactly throwing a party. Now layer in commodities. And this is where the story gets a little more annoying, because inflation is the guest who says they're leaving, then starts another conversation at the door. Oil is the standout. USO is 134.66, up 2.86%, sitting right below that 135 pressure line we flagged earlier. That matters because the headline stack is Middle East tension plus soaring diesel prices. And diesel hits the real economy through trucks, shipping, farms, margins. All the boring stuff that eventually shows up in prices. Gold, though, is not acting like pure panic. GLD is 411.06, down 0.67%, while the dollar proxy is up a touch at 27.91. So the chain today is not hide under the desk. It's more like energy inflation risk up, yields firm, dollar firm, equity risk appetite thinner. And at 12:30 we've got Philly Fed manufacturing, estimated 25, plus initial claims, estimated 210K, then leading index at 2 o'clock, estimated up 0.1%. That's the next data checkpoint, not a Fed crystal ball.
All right, let's check in with the Stock Whisperer paper book. This is the show's simulated 100K paper portfolio, and at this checkpoint, I'm deliberately not forcing a trade. SPY's red, QQQ's red, IWM is off about 1%, VIX is firm. So the question is not, what can we chase? It's did a clean trigger actually fire? First open position, aim at. Long 15 shares, average price 491.50, marking 489.58. So we're down 28 bucks and change, minus about 39 basis points. That's not a disaster, but it is also not paying us yet. And with semis, I don't want to get stubborn while the broader growth tape is leaning defensive. So the grade here is simple. Small unrealized loss, thesis not fully broken from what I can see, but no ad, no hero move, no emotional averaging. If the market gives us confirmation later, fine. Right now, this is a managed position, not a fresh idea. The other open one is XLRE, long 200 shares, average 44.9515, last 44.955. That's plus 70 cents total, not percent, literally basically flat. And honestly, flat can be useful in a risk-off open if it's acting as the boring stabilizer in the book. We do have Philly Fed and jobless claims later at 12:30 Eastern, so I'm not treating a tiny green mark like some huge win. It's doing the boring job for now. If it turns into dead money, we grade it again. Now, BTCT, because this has been the noisy one on the board. Earlier, this was a defined fade idea against the crypto liquidation headline, but I am not pressing buttons just because it's moving around. The next trigger I'm watching is lower, below 1.20. If BTCT loses 1.20 cleanly and holds below it, then the downside area on my plan is 1.08. If it sits above 1.20 and chops, I don't need to be involved. These small-cap crypto-tied names can reverse brutally, so here at the Stock Whisperer, the rule is pretty simple. Thesis, level, defined risk. Let's pull NVDA, because this is the cleaner risk-on tell for the whole semi-group. My line is 221 above. Not because 221 is magic, it's just the spot where I'd need to see mega-cap buyers actually take control instead of one green candle getting sold. QQQ is still below that 714.90 line the macro desk had on the board earlier, so I don't want to anticipate strength. NVDA through 221 with some acceptance would tell me the headwind on AMAT is easing. Below it, I respect the tape and stay patient. AAPL is the other watch, and I'm keeping this one very clean. 318.50 above. Earlier the market gave it a post-earnings bid, but I'm not going to reread the numbers. For this desk, the only question now is whether buyers can hold relative strength while the indexes are soft. If AAPL clears 318.50 and does not immediately reject, that's information. If it tags it and fades, that's just noise. No order from me until the level proves it. So, the scorecard right now. AMAT slightly red, XLRE basically flat, no new paper order, and 3 live alerts. BTCT under 1.20, NVDA over 221, AAPL over 318.50. The Stock Whisperer is staying patient here. Coming up, we'll kick it back toward the movers board and see if this risk-off tape is creating anything cleaner.
Thanks, Stock Whisperer. All right, Markets Desk back on the movers board, and yeah, this is still a small cap fireworks tape while the indexes sag. SPY's red, QQQ's red, IWM is down over 1%, VIX is creeping toward that 20 line. So when you've got MMA up 134%, JZ still up 85%, BTCT plus 60%, WETO plus 60%, that's not market beta. That's pure event flow, liquidity, and squeeze behavior. Oof, and look at the split here. ZTG down 50%, TNON down 42%. Same board, totally different tape. Gainers are squeezing, losers are getting air-pocketed. We're not camping on the table. We're going chart by chart. First one up, MMA, because 128 million shares is ridiculous for this name. MMA on the 1 minute now. This is the lead runner, 89 cents, up 134%. And the volume is the whole story. 128 million shares versus a normal day around 275,000. That's 466 times relative volume. So yeah, it's moving, but it's also crowded. Tiny market cap, roughly 26 million share float. And this is exactly where the markets desk stops cheering and starts keeping score. The old mid-50s battle is gone. That got smoked. Fresh tape is around 90 cents. Watch 90 cents on MMA. Above that, I want to see actual acceptance. Not one nasty wick and a slam back down. Under the prior push zone, this can turn into a rug pull fast, because these sub-dollar names don't give you polite exits. Not calling it clean, just saying the line on the chart is obvious. 90 cents is the squeeze door right now. JZ is the one I want to revisit here, because the character changed after that 450 area failed. I'm not going to rehash the whole old setup. The fresh tape is this flush back toward 315. Still up 85%, so it's not dead on the day. But that's a totally different trade once a high-volume runner loses the reclaim zone and starts putting in lower pops. Volume is absurd. 23 million shares versus basically nothing on an average day. And with a 4.5 million float, this can still snap back violently. But right now, for me, 315 is the battleground. If it can't stabilize there, you start watching the whole number magnet at 300. If buyers actually absorb it and push back through 340-ish, then maybe it gets interesting again. But this is no longer clean momentum. This is breakdown and bounce tape. BTCT next. And yeah, crypto-linked names are getting action, but this one already lost that prior 150 reclaim area. So I don't want to pretend it's the same clean squeeze it was earlier. It's still up 60%, 64 million shares traded, relative volume over 500 times normal. That is monster participation, but the question now is whether 134 is actually stabilizing, or whether it's just pausing before another fade. Watch the candles here. If every pop into 140 gets sold and volume dries up on the bid, that's usually not what you want to see in a squeeze. If 134 keeps holding and it starts reclaiming 140 with real prints, fine, then the tape is trying to repair. But below 130, this gets slippery fast. Crypto-linked small caps can whip around like crazy, so levels matter more than the story. Weto now. Totally different feel from the penny runners. This is a $33 name, up basically 60%, and the volume is real for this ticker, almost 3 million shares versus about 45,000 average. So yeah, still thin enough to move violently, but this isn't that same sub-dollar chaos we were just staring at. What I like about the read here is the $31 area already got hit, and it didn't instantly unravel. That matters. If this is going to stay constructive, I want to see 31 keep acting like the line in the sand, and then the tape needs to keep building higher lows instead of just one big vertical candle and dead air behind it. Big difference between controlled strength and a liquidity vacuum. Right now, Weto is the cleaner high-price mover on the board. But cleaner doesn't mean safe. It just means the chart is giving you actual structure to judge. Last pass here. SNSC on the 1 minute. This is that solar-powered robotics equipment story, around $1.85, up 41%. And I'm not going to oversell the buzzword combo, right? Robotics plus solar sounds great on a headline, but the tape still has to prove it. What I care about is whether this thing keeps accepting above that 1.80-ish area. Because if it starts living back under there, the move gets a lot less clean. Volume's over 3 million shares, so there is a tension here. Just not the same crazy relative volume profile we saw in MMA or JZ. Now, quick rotation. CDTG is actually the cleaner strength read to me on the board. 4.14, up 37%, almost 6 million shares, about 86 times normal volume, so that one's got real participation. Contrast that with PFSA and TNON on the healthcare loser side. PFSA down 38% on light relative volume versus its own huge average. TNON down 42% with high dilution risk showing. So those are more caution reads than momentum reads. Strong tape in CDTG, damaged tape in PFSA and TNON. All right, we're going to keep the movers board warm, but coming up next, let's shift gears and hit the fresh news flow.
Thanks. Markets Desk, let's shift from the hot tape to an earnings name with a real commodity story. GFI. Okay, so Goldfields is not exactly acting like a wild mover here, but that's kind of the point. Broader tape is soft, SPY and QQQ red, IWM weaker, VIX sitting around 19, and GFI came in a little heavy on the profile, down roughly 0.7. But look at the intraday chart. Sellers pressed it from the 44s down into that $43 area, and then buyers actually showed up. The stronger volume came on the bounce, from about 43.80 into the mid-44s. So this is not just dead cat noise yet. It's paused now, but it did defend the low. Here at the company desk, the earnings question is really simple. What does this actually change? The calendar has GFI reporting today, time not listed, with the EPS estimate sitting at 2.75. So we're not reacting to a fresh result yet. We're setting the frame before the number. And for a gold miner, I don't care only about the headline EPS beat or miss. I care about production, all-in costs, sustaining capital, and whether management says the higher gold backdrop is really flowing through to cash. The most recent company side item in the feed is not the earnings release. It's Goldfields increasing its strategic stake to 19.9%, around Founders Metals and the Antino Gold Project. Interesting, yes, but near term, that's more portfolio and reserve optionality than an instant P&L reset. Now the business underneath this is big. Gold Fields is a roughly $39 billion market cap global miner. 9 operating mines, with assets across South Africa, Ghana, Australia, Peru, Chile. So this is not a tiny exploration lottery ticket. The financials show why the stock has mattered in this commodity cycle. The latest Q4 snapshot in the platform has revenue at about $5.29 billion, net income around $2.55 billion, EPS $2.85 billion. Go back to Q2 2025 and revenue was $3.49 billion, with EPS 1.15. Q2 2024 was $2.12 billion and EPS 43 cents. That is a real step change. Margins are also very high in the trailing data. Gross margin around 59%, operating margin around 54%, net margin around 41%. But miners are never just clean margin stories. The balance sheet has about $3.22 billion of total debt, $1.78 billion of cash, net debt around $1.44 billion. So if gold pricing stays helpful, cash flow can look powerful. If energy, labor, or local costs bite, that operating leverage cuts both ways. Back to the tape, because this is where the market is giving us the tell before the earnings risk. The clean range on GFI today is $43 on the downside, and about $44.59, call it $44.60 on the upside. It bounced hard off 43, then stalled in that $44.10 to $44.30 zone. So my company desk read is, above $44.60, buyers are saying they'll pay up ahead of the print. Below 43, that morning defense failed, and the earnings setup looks a lot more fragile. I don't need to guess the report, especially with no listed time. I want to see which side of that range the stock respects. Coming up, we'll flip back into the market mover scan and see whether the speculative tape is still holding together.
Thanks, company desk. All right, markets desk is pulling up IPST because this one just went vertical. Oof, look at that candle stack. Market's soft. QQQ red, IWM down more than 1%, and IPST is sitting on the movers board up about 74%. That matters. This opened around 848, flushed early to 825, then buyers built a base around 850, and then boom, volume hits, it clears 9, clears 10, and turns into a straight parabolic push into 1469. That's the day high. That's the line now. If this can't stay bid near that high, these parabolic names can snap back fast. But above 1469, that's the breakout trigger traders are staring at right now.
Thanks, Markets Desk. Quick stock whisperer check on the MRK paper long. This is the show's simulated paper portfolio, just to be crystal clear, and the new position is 50 shares long MRK at an average of 150.11. It's trading around 150.31 here, so basically flat to green, up about $10, nothing to celebrate yet. The reason I took it is simple. MRK is moving on that Moderna-Merck cancer vaccine trial catalyst, and in a tape that's mildly risk-off, SPY down a third, QQQ down about 4/10, IWM weaker. I'd rather test a defined risk large-cap catalyst than chase the wild small-cap stuff. The bracket is the whole trait for me. Stop is down at 145.80, take profit order is up at 158.50. Thesis, level, risk. Rest of the book is quiet. AMAT is still a small unrealized loser, down 28.80, about minus 0.39%. And XLRE is basically a scratch, up 70 cents on 200 shares. I'm not forcing anything else while the tape is soft. Cash is still a little over 52 grand, so the account has room. But room doesn't mean we have to press. Working orders are still live. AMAT has its 478.50 stop and 515 take profit. XLRE has 43.90 and 47.20. And MRK is now the fresh one with 145.80 risk and 158.50 upside bracket. The related watch from here is mRNA above 146.50. If the partner name confirms, that helps the read on the catalyst. Coming up, we'll flip back into the platform flow.
All right, back to the movers board. Markets desk is going straight at the names with real volume. not just green candles. Tape is soft. SPY down a third. QQQ down about 44 bips. IWM off a full percent. VIX a little firm. So if a small cap is up 70, 80% in that tape, yeah, that stands out. MMA is still parked at the top. 68 cents. Up about 79%. Monster relative volume. BTCT right behind it. Crypto linked. Up 77. And that one already rang the scoreboard earlier. IPST, we just lived on that chart. Still up big. JZ and Wado are both green. Totally different personalities. Loser side stays nasty, with ZTG and TNON down 40. We're not camping on the board. MMA first. Oof, this is why the board matters. This is a 68-cent Amex runner up roughly 79%, and it's already done about 151 million shares versus an average under 300,000. That's not casual volume. Relative volume is 550 times, floats around 26 million, market cap only about 13.5 million, and the dilution risk tag is high. So this is exactly the pocket where candles can rip and rug in the same minute. For me, the clean upside line is 70 cents. I want to see real acceptance above 0.70, not one wick and a slap back down. Underneath, 64 cents is the danger line. If that cracks, the fade gets a lot more slippery. Volume confirms attention. Now the 1-minute tape has to prove control. BTCT next, and this is the crypto-linked squeeze check. Pulling up the 1-minute now. This one's sitting around $1.48, up about 77%. And the volume is not fake volume either. Almost 79 million shares versus an average around 122,000. That's 600 plus relative volume. So yeah, traders are absolutely in this. The clean line on the tape is 150. If it can keep reclaiming and holding above 150, that tells you buyers are still leaning on the squeeze. If it keeps wicking through 150 and snapping back under, that's where I'd be careful. Because crypto-linked small caps can go from breakout to air pocket in like 2 candles. And with high dilution risk on the board, I'm not treating this like a clean blue chip momentum name. Now, IPST, different personality here. Higher priced mover, thinner volume compared with BTCT, but still huge relative activity. About 1.8 million shares, roughly 36 times normal, and it's up around 74%. This is the post-deep dive continuation versus parabolic fade test. Price is sitting right around 1460, 1470, so I don't need to overcomplicate it. That high price range near 1470 is the fight. If buyers defend that zone and the candles stop making those nasty upper wicks, then the momentum is still alive. If 1470 keeps rejecting and you start seeing lower highs stack up, that's the fade risk. This is where I want confirmation, not just a pretty percent gainer number on the board. JZ now, and yeah, this is the follow-up after that downside tag. Pulling the 1-minute back up, the board still shows a monster relative volume number, over 2,000 times normal volume, but price is around 277 now, so that 340 repair level is still a no-go. That's the line. If JZ can't even start reclaiming 340, it's not a clean momentum reset. It's just bounce attempts into trap supply. Tiny float, high dilution risk, huge volume. That combo can move fast both ways, so I'm treating 340 as the repair check, not chasing every green candle underneath it. Wado next, totally different price box. This thing's up about 50%, trading right around 31.20, and the structure line we care about is basically 31. So this is clean if it's holding above 31 and building there. It gets sketchy if you keep seeing those big upper wicks and immediate rejects back through the level. Volume is real, just over 3 million shares versus normal volume around 45,000. But high-price movers like this can be wick machines. I don't want to overcomplicate it. 31 holds, tape is controlled. 31 fails, the move starts looking a lot more like a liquidity trap. BIVI now, classic biotech momentum look. We're on the 1-minute, and the board has this thing just under $2, up about 45%, with almost 20 million shares traded. That's not a sleepy biotech print, that's real participation. The big magnet is obvious, $2. When these names get pinned right under a round number, you want to see if buyers can actually accept above it, not just poke it and instantly reject. And yeah, important part here, BioV carries high dilution risk data on the board, so I'm not treating this like a clean large cap breakout. Biotech runners can be brutal, offering risk, headline risk, fast rug pulls. For me, the read is simple. $2 above, hold the volume, stay constructive. Lose that momentum and it can turn into a chase trap fast. All right, quick loser board check before we hand it forward, because red names are where people get baited into the ugliest bounces. ZTG first. Sub-dollar, down about 41%, but volume is 57 times normal. The clean line there is $1. If it's living under a buck, that's still damage tape. If it reclaims one with volume, then at least you've got a real reference point for a bounce attempt. Now, TNON, also down about 41%, but different feel. 670-ish, medical device name, high dilution risk tag, and only about 3 times relative volume, so it's not the same panic volume squeeze setup as ZTG. That matters. Red stocks need stricter confirmation than green stocks. One bounce candle is not a reversal, it's just a bounce candle. Good movers scan overall. The winners had monster relative volume. The losers need levels reclaimed. Coming up, we'll flip from the board into the next story and see what actually has a catalyst behind the tape. All right, let's hit the movers board and go volume first, levels second. Market's got a little weight on it. QQQ red, IWM down about 1%, but this small cap board is still loud. BTCT is the headline, up 90%, 82 million shares, 670 times relative volume. That's not casual interest. IPST still sitting up there after that earlier parabolic move. PCLA's up big, but the relative volume rating is tiny here, and MMA is still hanging around the top even after that monster tape earlier. So here at the markets desk, we're not marrying any of these. We're checking. Where did volume actually confirm, and where does the chart start to fail? BTCT first, because this is the loudest thing on the board right now. We're at $1.59, up about 90%, and the volume is the story. 82 million shares versus an average barely over 120,000. Oof, that's squeeze tape. And remember, we already got that BTCT 150 reclaim hit earlier. So now the question is whether that level turns into support or just becomes a trapdoor. I want to see acceptance over 160 if this is going to keep acting clean. If it starts losing 150 again, that tells me the chase is getting tired fast. Also, tiny market cap, high dilution risk showing in the data, crypto-linked name. So yeah, exciting chart, but this can move both ways in a blink. IPST next. Quick check only, because we already did the bigger breakdown earlier. This one's still sitting near that 1469 print, up about 74%. Volume around 1.8 million, and relative volume is real at roughly 36 times normal. So for me, the whole question on this one is super simple. Does 1469 become a lid, or do buyers actually accept above it on the 1 minute? If it keeps wicking there and snapping back, that's supply. If it bases under it and then reclaims, okay, now the tape's telling you somebody still wants it. And with IWM down about 1%, that relative strength matters. But yeah, high dilution risk small cap, so don't confuse strength with safety.
Thanks, Markets Desk. Breaking across Pro Terminal right now. U.S. stock index futures held steady this morning after that technology-led sell-off, with investors shifting focus to inflation prospects and rising geopolitical tension in the Middle East. What we know, the market came in cautious. Tech was already under pressure, and the Middle East risk is feeding straight into the inflation conversation because oil is up almost 2.9% on our cross-asset board. What we do not know yet is whether this is a temporary pause in risk appetite or a bigger repricing of growth stocks around rates and energy. The live cash read is softer. SPY around 766.7, down 0.3%. QQQ down about 0.5%. Small caps heavier, with IWM off just over 1%, and VIX sitting near 19.3. So yeah, not panic, but definitely not beach chair confidence either. Next headline. Stocks rose modestly and Treasury yields dropped after news of increased government bond repurchases. That matters because lower yields are basically oxygen for long-duration assets. Tech, growth, anything where the valuation lives out in the future and needs a discount rate umbrella. Tiny problem, because macro loves making clean stories messy. The live bond proxies are not giving us a full victory lap. TLT is around 82.32, down 0.85%. IEF is down 0.43%. And the dollar is basically flat, up 0.09%. Gold is also lower, at 411.06, off 0.67%, even though softer yields usually help it. Meanwhile, crypto beta is catching a bid, with BITO up 4.8%, Coin up 6.9%, MSTR up 6.8%. So the headline says liquidity support. The tape says, okay, but check the plumbing before declaring the basement dry. Third big one. Moderna shares surged nearly 177% after positive results in an experimental cancer vaccine study. That is a monster biotech move, and the reason it matters is bigger than one ticker. It can reset risk appetite across the higher beta healthcare names when investors see real clinical data tied to a potentially large market. But the macro desk is going to be the boring adult in the room for 10 seconds. Early clinical excitement still has regulatory, trial design, and commercialization hurdles. So the stock reaction and the science timeline are not the same clock. In a tape where QQQ is red and VIX is up, that kind of single-name strength is telling you idiosyncratic catalysts can still overpower the index for a day. Coming up, we hand it back to the mover scan, because macro is the weather, and that board is where the patio furniture starts flying.
Thanks. Macro Desk, quick pit stop on the tool we're actually using all morning. This is ProTerminal's Dilution Center. And yeah, for the kind of small cap runners we've been staring at, the wild wicks, the crazy relative volume, the penny stock squeeze tape, this page matters. Shelves, ATMs, offerings, equity lines, that stuff can change the risk profile fast. It's not a buy or sell button. It's the reality check before you get hypnotized by a green candle. Now, flip to the movers board. This is the heartbeat for the markets desk. MMA, BTCT, JZ. These names pop because the board is ranking what's actually moving, with price, percent move, relative volume, market cap context when it's there. And look at the tape behind it. SPY and QQQ are red, IWM's weaker, VIX is up a touch. So when a small name is green in that backdrop, cool, we pay attention. But we still ask, is it real participation or just one nasty liquidity pocket? Here's the single name research side. I'm pulling up HUIZ just as an example, not pitching the stock, just showing workflow. First stop, filings. This is where you can catch the stuff that doesn't show up in a clean little headline. Registrations, prospectuses, amendments, anything that might matter for supply. Then we flip to insiders. Same idea. Who's filing? What changed? What's dated? What's fresh? Sometimes there's a lot here. Sometimes it's thin. Sometimes data can be delayed or incomplete. Fine. The point is, you're not flying blind off one candle and a chat room headline. And then we go right back to the 1 minute chart because this is where the tape tells on itself. Volume comes in. Wicks reject. VWAP gets fought over. Levels either hold or they don't. That's the whole loop. Movers board, chart, dilution, filings, back to the chart. Educational only, obviously. No magic signals, no guarantees. But if you want the same screens we're using on the show, it's ProTerminal. Sign up at proterminal.io.
Alright, back to the movers board. No full reread, just scorekeeping and the next chart. Tape is still a little heavy. SPY red, QQQ red, IWM down about 1%. VIX firm. So when these little names are still green, that matters. But it also means the rug pull risk is real. Quick scoreboard. MMA over 70 cents hit. BIVI through $2 hit. Nice. We move on. IPST is still sitting on this board at about 1323, up 56%, 40 times relative volume. That's the next check here at the markets desk. Is it still bid, or is the parabolic air leaking out? Okay, IPST on the 1 minute. And oof, this is exactly why vertical candles are dangerous. You had that earlier squeeze up into the high 14s. Now we're back around 1323-ish. Not dead, but it's not clean momentum anymore either. For me, 13 is the line on this chart. If 13 keeps catching bids, fine. You can see a curl attempt back toward 1380, maybe the low 14s. But if 13 cracks and starts rejecting from underneath, that starts looking like late buyers trapped in the move. Volume is real, a little over 2 million shares, relative volume around 40 times. But this is still a tiny market cap name with high dilution risk showing in the data. So I'm treating the percent gain like noise and the candles like the truth. Wedo next. This one's still sitting right around that 31 area. So this is the spot where the chart has to prove it. Stocks up 51%, about 3.2 million shares traded. Relative volume near 71 times normal, and the float's only about 5.7 million. So yeah, the candles can get jumpy fast. For me, 31 is the line on this 1 minute. If buyers keep stepping in above it, it's still acting like support, and the move is at least controlled. But if you start seeing those quick flushes under 31 and instant rejection candles, that's wick risk taking over. That's when it stops looking like clean momentum and starts looking like a trap for late chasers. Now BIVI, and this is the clean round number test. We flagged that $2 hit, and look, it's literally printing right on $2 with a 49% move. Volume's big, 23 million shares, relative volume over 220 times normal. Small float biotech, and dilution risk is high, so don't treat this like a sleepy large cap. The question is simple. Does 2 become acceptance, or does 2 become the ceiling? If it can build candles above 2 and stop immediately snapping back under, that's buyers saying, okay, we'll transact up here. If every pop over 2 gets sold right back into 190s, then the round number is just supply, not support. MRNX now, and this is the weird looking one on the loser side. You see negative 42%, $81, about 842,000 shares traded. But remember what this is. Daily target 2x long mRNA ETF. So this isn't a normal operating company read, and I'm not going to pretend float data means anything here when the board doesn't have it. This is leveraged single name exposure. So when the underlying goes the wrong way, the ETF damage can look absolutely brutal. And that matters because we were just looking at BIVI, biotech excitement on the upside. This is not the same story. This is more like leveraged product math punching the chart in the face. On the 1 minute, I want to see if 81 can stop acting like a trapdoor. If that 80 level gives up, that's where the selling can stay mechanical. TNON next. Medical device name, Tenon Medical. And this is ugly too. Down just under 42%. Trading 660-ish. Volume a little over 1.1 million. Almost 3 times relative volume. So there is actual tape here, not just a ghost print. The question is whether this bounce is controlled or whether it's just another lower high before sellers reload. I'm watching the 650 area first, because if it keeps dipping under that and can't reclaim, that's not stabilization, that's still pressure. Above 7, different conversation. Then at least you've got a round number reclaim, and maybe shorts have to respect it for a minute. But right now, with high dilution risk on the board and recent filings flagged, I'm treating strength here as something that has to prove itself candle by candle, not something I'm chasing just because it's bounced off the low. ZTG now, quick 1 minute check, and this is all about the dollar line. Stock's down almost 39%, trading basically $1, but the volume is real, 4.5 million shares, about 61 times normal, and the float's only about 3 million. So yeah, it can move, but this is where you separate an actual reclaim from a weak dead cat bounce. If it's just popping over 1, failing and sitting heavy underneath, that's not strength. That's trapped bounce energy. What I'd want to see on this tape is $1 reclaim, hold, then a higher low above it. If it keeps losing 1, the chart is telling you buyers still aren't in control. Last one on the loser board, PFSA. And this one's a different flavor of ugly, down 36%, 870-ish. But look at the setup underneath it. Super thin float, just about 600,000 shares. High dilution risk tag on the board. And today's relative volume print is tiny versus what this thing normally does. That combo can make the chart feel empty. You get these fast candles, then no real bid, then another air pocket. For me, 850 is the line where it needs to not get sloppy. Below that, it can get jumpy fast. If it can't even start reclaiming 9, I'm not calling that stabilization. I'm calling it a bounce attempt inside a broken move. Alright, that's the movers board lap. Next, let's flip back to the broader tape and see what's driving the market underneath these single-name fireworks.
Thanks, Markets Desk. Quick Stock Whisperer check-in on the paper book. This is the show's simulated portfolio, just so we're clear. I'm managing theses and defined risk on screen, not giving anybody a copy trade. The tape is a little heavy. SPY down about 0.3, QQQ down 1/3, IWM off about 1%, VIX firm near 19. So for me, first decision is no new decision. Check the positions, check the brackets, don't force fresh risk. Alright, open positions. AMAT is the one that cleaned itself up. We're long 15 shares from 491.50, last showing 495.455, so that's up about $59 plus 0.8%. It was a small loser earlier, now it's behaving. Not a victory lap, just better tape. MRK is basically sitting right on our entry, 50 shares from 150.1113, last 150.09, down $1 and change. So nothing dramatic there. The 150 area is holding, but it hasn't paid us yet. XLRE is doing the slow defensive thing, 200 shares from 44.9515, last 45.065, up 22.70, about 0.25%. In a mixed tape with small caps weak, that's fine. It's not supposed to rip, it's supposed to dampen the book. Now the brackets. MRK still has the take profit parked at 158.50 and the stop at 145.80. Neither came into play, so the thesis is unchanged but unproven. AMAT's bracket is 515 up top, 478.50 underneath. XLRE is 47.20 up top, 43.90 underneath. Those are the lines. If they hit, and I'll grade it live. On the watch side, mRNA above 146.50 is still the confirmation level for that vaccine catalyst momentum, while below 132 is the failed spike warning. NVDA above 221 is my broader semi-risk on check. No fresh paper order here at the Stock Whisperer until a trigger actually fires. Coming up, we'll hand it back into the mover scan.
Thanks, Stock Whisperer. Alright, Markets Desk back on the movers board. Let's keep score and keep it moving. Tape's still a little heavy. SPY down 1/4, QQQ down 0.4, IWM off almost 1%. VIX firm. So if a small cap is green in this tape, it has to prove the bid is real. I'm not going to reread the whole board. MMA, BTCT, JZ are still the high relative volume freaks up top. Wedo and BIVI already gave us those earlier level hits. And now, I want IPST. Heritage Distilling up about 35%, 43 times relative volume, but it slipped hard from that prior 13 area. That's the one we need on the chart next. Okay, IPST, 1 minute. This is the difference between a big percent gainer and clean momentum, and right now, it's not clean. Price is around 1137, still green by about 34%. Volume's already 2.17 million versus normal volume around 50,000. That's real attention. But the earlier 13 downside line is gone, so now 13 is overhead supply, not support. Oof, this is where you don't chase the headline. You watch whether it can build higher lows. For the Markets Desk, 12 is the first repair level. If it can't even reclaim 12, it's just bouncing inside damage. Under 11, that's where the round number trapdoor opens and the fade can get sloppy. Also, IPST has the high dilution risk tag, so the tape can move nasty in both directions. Next pass, we're checking Wedo, because that 31 line we flagged already broke once, and the wick risk is still the whole story there. Wedo next, and this is the one where the level actually mattered. 31 was the support spot we were watching, and yeah, it broke. We're sitting around 30.26 now. Still up huge on the day, but this is where the wick risk gets nasty. It's a 5.7 million float name doing over 3 million shares, relative volume north of 70 times, so the liquidity is there. But when it loses a clean whole dollar support like 31, you can get those air pockets. For me, the tape repair is simple. Can it reclaim 31 and actually hold above it, not just poke its head over and reject? If it can't, then every pop back toward 31 risks becoming a lower high fade. Now, BIVI, biotech momentum, and this thing got the $2 check. Price is around 1.95, up about 45%, with 24 million shares traded versus a normal day around 100,000. So this is real volume, not some tiny print. But look, the difference between a clean breakout and a trap is acceptance. If BIVI can't live above $2, that $2 tag becomes a failed move, and biotech small caps can fade hard once the chase volume dries up. Also worth flagging, dilution risk is marked high here. So yeah, the chart is active, but I'm treating 2 as the line. Above it, momentum looks cleaner. Below it, fade risk is still the whole story. BTCT now, crypto-linked runner, and misses the clean little battle right on a $1.50. Stock sitting around 149, up about 78%. And the volume is just ridiculous versus normal. Almost 88 million shares, 700 plus times relative volume. But look, don't lose the plot here. This is a low-priced crypto mining name, floats under 9 million. Dilution risk is marked high, so the tape can get nasty fast. For me, the line is simple. 150 is the fight. If it keeps wicking into 150 and failing, that's supply showing up. If it can actually hold above 150, then 160 is the next spot where I'd expect sellers to test it again. Market's still soft. Q's red. Small caps red. So when these tiny names are running against that backdrop, you respect the volume. And back to MMA, still the leaderboard boss by percent, still up over 100%. But now we're checking whether it's holding control or just burning volume. Price is around 82 cents. Volume over 200 million shares. Relative volume about 730 times normal. I mean, that's not a normal tape, that's pure small cap momentum flow. The control level for me is 80 cents. As long as it's hanging around 80 and not losing it clean, the bid is still at least trying to defend. But the reclaim is 90 cents. That's where the chart starts to look different again, because under 90 it's still a monster move that's digesting. Over 90, then traders start looking back toward the earlier squeeze zone. Same warning as the others. Sub-dollar, high dilution risk, gigantic volume. That can be opportunity for scalpers, but it can also be a trap if the bid disappears. Last one on the gainer side, JZ. Pull this up because this is a sneaky, important read. Stock's around 2.82, still up about 66%, and the volume is silly versus normal. 27 million shares against basically nothing for average volume. But remember the level from earlier, 315 to the downside. That got hit, and since then the tape has been trying to repair, but it's doing it with lower highs. So for me, 2.80 is the line in the sand right now. If it keeps accepting below 2.80, that's distribution, not a clean reclaim. If it can actually base over 2.80 and start working back toward 3, then okay, maybe the dip buyers are still alive. But with IWM still almost 1% red and VIX green, small cap runners don't get a free pass today. They've got to prove it candle by candle. Quick loser board snap check before we hand it off. MRNX is still ugly, down about 40% at 84, but that's a leveraged ETF product, so I'm not treating it like a normal company chart. TNON is sitting around 679. $7 is the obvious reclaim spot, and below that it stays heavy. PFSA at 830, volume way colder now versus what it had been doing, so 8 is the danger shelf. And ZTG under $1 at about 94 cents. That one needs $1 back fast, or it's still trapped under that breakdown. Alright, that's the movers board. Leaders are still MMA, BTCT, JZ, but the cleanest lesson today is levels matter. Coming up next, we'll flip off the board and get into the next live read.
Thanks, Markets Desk. Breaking here from the macro desk. Apple is back in the headline slot. ProTerminal's newsroom is tracking the call that Apple is entering its most important product cycle in years. What we know, the story frames this as a critical new launch cycle, and the analyst target tied to it is about 15.7% above the recent close. So yeah, expectations are not exactly being set at ankle height. What we don't know yet, exact timing, actual unit demand, margin impact, and whether supply can keep up if the cycle really hits. That's the whole market read. With QQQ around 712.6, down about 0.5%. Apple isn't just another phone company on a red tech tape. It's one of the index steering wheels. If this product cycle story gets traction, it can change mega-cap sentiment. If execution wobbles, the market will find that wobble very quickly. Next headline. Berkshire Hathaway's portfolio is now heavily tied to 2 AI stocks. The desk is seeing nearly 30% of a roughly $356 billion portfolio concentrated in those two AI-focused names. That matters because this is not a meme wallet situation. This is one of the market's most watched capital allocators leaning into the same AI gravity well everyone else is staring at. The macro angle is simple. When the biggest pools of patient capital crowd into mega-cap AI, index leadership gets narrower, and QQQ starts behaving like a very expensive group project. Fine when the leaders lead, less fine when they all sneeze at once. And staying with Apple, third headline, Apple gains an edge in India as a chip squeeze hits Chinese smartphone makers. The key number on the card is India's smartphone average selling price at a record $315, with Apple and Samsung benefiting while cheaper Chinese brands deal with lower-end chip shortages. Why it matters. India is one of the few giant smartphone markets where mix shift can still move the needle. And if premium brands are gaining share while pricing is moving up, that feeds directly into the Apple margin debate. Still, the desk is not calling victory on one supply chain headline. Competition in India is brutal, and supply shortages cut both ways. Coming up, we'll hand it back toward the movers board because the small cap tape has been acting like it had 3 espressos and no adult supervision.
Thanks, Macro Desk. Quick mega cap check on Google. Daily chart first. This is not leading the tape right now. QQQ's down about 0.5%. Google's off roughly 0.7, so it's lagging just a bit. Bigger picture. Monster run from the low 320s up through that 402 area. Then the chart got heavy. Lower highs up around 370, 375. Now it's sitting right on that 340 to 342 support shelf. That's the whole daily read. Below the short-term averages, still above the bigger 200-day area near 333. Range bound, not a clean breakdown yet. Let's drop down to the 1 minute. Here's the tape. Opening push toward 343.90, then sellers hit it. Oof. Big volume on that flush down near 341.13. Since then, not a rip. It's a base. Tight, quiet, 341.30 holding so far, but every bounce is stalling under 343.30, basically right under the open. So here at the markets desk, I'm scoring this as repair only if it can reclaim 343.30 with real volume. If 341.30 gives up, that daily 340 shelf comes right back into focus. Coming up, we'll kick back to the movers board. Cleaner volatility over there.
Thanks, Markets Desk. Top of the hour, quick market minute for anybody just jumping in. It's 11 a.m. Eastern, and the tape is leaning soft, not broken. SPY, 767.10, down 0.25%. QQQ, 713-ish, down about 0.4. Russell's the weak kid at lunch again. IWM, 298.90, down almost 1%. VIX is only 1921, up less than 1%. So this isn't panic. This is more of a rates and oil squeeze on risk appetite. Here at the macro desk, the chain is pretty simple. Oil is up 2.17% to 133.75. Bond proxies are red, with TLT down 0.68% and IEF down 0.34%. And when energy goes up while bonds go down, equities usually stop humming show tunes. Small caps feel that first, which is exactly what IWM is telling you. The interesting part is the cross-asset split. Dollar's basically flat at 27.90, but yen is softer, down 0.41% to 57.79. So even if you only trade US stocks, keep one eye on FX. Yen weakness can feed the global rates conversation fast. Gold is barely changed, GLD 413.62. So there's not a big safe haven stampede. And then crypto beta is doing its own little side quest. BITO up 4.81%. Coin up 6.57%. MSTR up 5.09%. That tells me risk appetite isn't dead. It's just picky, like a hedge fund at a buffet. What I'm watching from here, QQQ needs to prove it can reclaim the upper end of that 714.94 intraday zone. 711.35 is the downside base area. VIX getting near 20 would change the temperature. And the calendar has Philly Fed and jobless claims listed at 12:30. Then leading index at 2. Coming up, we'll hand the tape back into another market mover scan. Then a quick pro terminal pass after that.
Thanks, Macro Desk. All right, Markets Desk is grabbing the movers board. This is not a pretty index tape. SPY red, QQQ red, IWM weaker, VIX green. And still, look at this board. MMA is top, up 98%, 224 million shares, relative volume over 800 times normal. That is insane. BTCT right behind it, plus 73, 90 million shares. JZ still plus 65 with the biggest relative volume print on the board, over 2,200 times normal. Then IPST and BIVI both sitting around plus 63. So the board is hot, but this is not broad risk on. This is isolated momentum. Big difference. We're going chart by chart now. Clean momentum versus late day trap, that's the whole game. Okay, first chart is MMA, top of the board. And oof, look at that wick action. This thing is still up almost a double on the day, price around 75 cents, but the tape just clipped that earlier 80-cent area we were tracking. So now I'm not grading this like a clean breakout anymore. I'm grading it like a momentum name trying not to lose control. 224 million shares traded versus about 275,000 average. That's monster attention. But monster volume after a huge extension can be fuel, and it can also be exit liquidity. The new line for me is 75 cents. If that starts failing and the offers stack, that's not consolidation, that's unwind risk. Also, high dilution risk on the profile, sub-dollar stock, tiny market cap. So yeah, we can read the tape, but I'm not hyping this thing. BTCT next, and this is the crypto-linked small cap squeeze on the board. Crypto miners can get silly fast, so I'm not treating this like a clean large cap chart. I'm treating it like a momentum tape. Price is sitting around $1.45, up 73%, and the crazy part is the volume, about 90 million shares traded versus an average around 122,000. That's 700 plus relative volume. So the question now is simple. Is 145 becoming a base, or is this just the backside after the liquidity event? I want to see candles stop rejecting that area. If it keeps reclaiming and holding above 145, okay, buyers are still defending it. If it starts living below that and the pops get smaller, that's usually the squeeze cooling off. Also, high dilution risk name, small float under 9 million, so yeah, this can move, but it can also rug pull fast. Now, JZ, quick follow-up only, because we already had that 280 line on the scoreboard. This is the repair or distribution check. Stock still up about 65%, price right at 280, and the volume is absolutely bonkers versus its normal tape. 28 million shares against an average around 12,000, so over 2,000 relative volume. If JZ is actually repairing, 280 needs to start acting like support instead of a ceiling. You want to see it absorb dips and stop making lower highs. If every push into that area gets sold immediately, then that's distribution, not a clean reclaim. Tiny float, high dilution risk profile, so I'm keeping this super level based. Above 280, the tape is trying to stabilize. Below it, the fade is still in control. IPST up now. This is the one where that $12 reclaim already paid attention. And now the board has it sitting around 1384, up about 64%. So the question is pretty simple. Is 1380 $14 controlled strength, or is this the late trap extension where everybody piles in after the move already happened? Volume's not tiny, about 2.9 million shares, roughly 58 times average volume. But compared with MMA and BTCT, this is way less insane. For me, the clean read is, above 12, the reclaim is still meaningful. If it starts failing back under 13 and can't reclaim, that tells you the extension is getting heavy. If buyers keep defending the 1380 area, then yeah, the tape is still respecting the high end of the move. BIVI next. Biotech momentum, and this one's actually got some real liquidity behind the move. Stock around 219, up 63%, 32 million shares traded, and relative volume over 300 times normal. That matters, because after that $2 acceptance hit, You don't want to see a name just drift above the level on fumes. You want actual volume staying with it. Now, it is biotech, it is small cap, and the dilution risk on the board is high, so I'm not romanticizing this thing. The level check is $2 underneath. If 2 turns into support, that's constructive tape. If 219 keeps getting rejected and it starts bleeding back toward 2, then the breakout is losing that momentum profile pretty fast. Alright, Wedo is the cleanup chart here. Quick revisit only. This was the earlier 31 break, and now the board has it around 28.91, still up about 39%, but it's not the same clean momentum look. So for me, this is super simple. If 28.91 starts stabilizing and buyers defend that high 20s shelf, fine, maybe it repairs. But if it keeps leaking under that area, then the 31 break was probably more trap than launchpad. Relative volume's still huge, about 75 times normal, so don't fall asleep on it. But this is where the character matters more than the headline percent gain. Now fast loser board sleep, no full redo. PFSA first, down 41% around 795, tiny float, high dilution risk, so $8 is the quick line. Below that, it's still heavy. ZTG is the obvious psychological one, sitting around 96 cents after a 41% hit. If it can't reclaim a buck, sellers are still in control. TNON around 7, down almost 39%, and that $7 shelf is the check. Lose that and it's still just lower high city. MRNX is different. That's a 2 times long mRNA ETF, not a normal operating company small cap, sitting around 84 and down 40%. So the risk there is structure and leverage, not a float squeeze story. Alright, that's the movers board heat check. Nasty index tape, pockets of small cap insanity. And now we'll flip forward into the next read on the tape.
Alright, quick pro terminal lap while the tape is still choppy. First stop, dilution center. This is the stuff the markets desk wants in front of us before chasing any tiny runner. Shelves, ATMs, offerings, the financing overhang. Not sexy, super important. Because a chart can look clean for 5 minutes, and then, oof, one filing headline changes the whole setup. Now flip back to the movers board. This is the heartbeat of the show. Top gainers, top losers, price, relative volume, float context when it's there, all in one spot. But look, green row does not mean buy signal. Red row does not mean short signal. It's a research starting line. Earlier we had names like MMA and BTCT going wild, while the broader tape was red to mixed. SPY barely down, QQQ soft, IWM weaker. So relative strength mattered. Then, when a name catches your eye, you don't stop at the candle. You open the profile. I'll use HUIZ here, just as the workflow example. Filings tab, first. Recent SEC docs, registration statements, 8Ks, anything that tells you what management actually put on paper. Then insider trades. Same idea. Not a magic signal, not some crystal ball, but it gives context. The whole point is stack the evidence before you decide what the tape is really saying. And then, boom, terminal chart. 1 minute tape, right in the same platform. This is where we line up the move, volume, VWAP behavior, wicks, failed breakouts, all of it. Data can be incomplete or delayed sometimes. And yeah, the stream is educational. We're not promising outcomes. But if you want the same stack we're using live, movers, dilution, filings, insider data, charts, it's ProTerminal. Sign up at proterminal.io. Coming up, we're right back to the movers scan.
Alright, back to the movers board. We're picking this up with BTCT because this tape is still loud. Market's not giving anybody a free ride here. QQQ red, IWM down almost 1%, VIX near 19 and change. So when a small cap crypto linked name is still up around 80% with 90 plus million shares traded, yeah, the market's desk is paying attention. Board says BTCT, BTC Digital, around $1.51, relative volume 765 times normal. That's not normal interest, that's event tape behavior. Now flip the chart. Okay, on the 1 minute, the only thing I care about now is whether buyers can actually accept above the current squeeze area, not just spike it and dump it. I'm using 152 as the clean little reclaim line here. Above that, momentum traders can keep leaning on it. Below that, especially if volume dries up, it turns into chop fast. And remember, crypto-adjacent small caps can move nasty both ways. High dilution risk on the board too, so this is not a clean blue chip breakout setup. Now, hit who is, because this one's sneaky. It's not the top percent gainer, but look at the relative volume. 4,200 times normal. Oof, that's a fire alarm. Who is around 206, up 41%, 74 million shares already through the tape. And the market cap shown here is tiny, under 1 million, so the float dynamics can get messy real quick, even without a listed float number. On the chart, I'm treating $2 as the big psychological line. Above 2, buyers still have the ball, and the tape can stay jumpy. If it loses too cleanly, that's where these microcap squeezes can go from fun-looking to trapdoor in about 3 candles. I don't need to predict it, just keep score. Price above 2, volume still active, momentum alive. Price below 2, volume fades, then it's a totally different read. Flip BIVI. Up here, biotech momentum check. And this is the spot where I don't want to overcomplicate it. Board has it at 204, up about 52%, 35 million shares, 340 times relative volume. So yeah, there's real tape here. The question is that prior $2 acceptance area. If BIVI keeps building candles above 2, buyers are still repairing the move, and you can treat 2 as the line where momentum is trying to base. If it starts wicking under 2 and failing back through, that's where this turns from clean momentum into a fade setup. Small cap biotech, high dilution risk on the board, so I'm not chasing the headline. I'm watching whether $2 is actually defended. Now, Wedo, and again, we already did the big level map earlier, so I'm not doing the whole 31 speech unless price actually tests it. What matters right here is the stabilization zone. Board print is basically $30. 30.05. Still up 44% on 3.4 million shares, 75 times volume. So this is live or die around the round number. If 30 keeps getting reclaimed on the 1 minute, that's stabilization. If it loses 30, pops back up, and sellers stuff it immediately, then the earlier base is not repaired. That's a failed reclaim. For now, the chart only needs one question answered. Are bids still showing up at 30, or is this just drifting off the high volume move? IPST here, scoreboard time, because we've got 2 open lines on this one, 12 and 1384. Board has it around 1213, up 43% on about 3.7 million shares. So buyers did repair the first line by a hair, but I'm not doing the victory lap on that yet. 12 is the spot where you want acceptance. Candles spending time above it, not just one quick tag and then a flush. If it slips back under 12, that repair failed. And 1384 is still the upper checkpoint. Until that gets reclaimed with real volume, this is more bounce attempt than clean continuation. Small cap, high dilution risk on the board too, so this stays very level to level. All right, the markets desk is going to park it right here. Tape stayed heavy. QQQ red, IWM weaker. But the board paid. BTCT, JZ, IPST, BIVI all hit our levels. MMA under 75 cents was the miss. Respect the volume, respect the